Good afternoon and welcome to the afternoon session of the JC3 Finance for Change Flagship Conference hosted by Bank Negara Malaysia and Securities Commission. This event is supported by the UK government's ASEAN Low Carbon Energy Prosperity Programme in partnership with Ernst & Young. This conference would not be possible without the support and hard work from CIMB, SME Bank and Zurich, and without help from our knowledge partners Climate Governance Malaysia, WWF, FIDE Forum, Swiss Re, Fair Finance Asia, AFI, and IPFIM. I am Elena Almeida, Program Advisor for the UK Government's ASEAN Low Carbon Energy Prosperity Programme from the British High Commission in Kuala Lumpur, and I will be your MC for this afternoon. Some of you may not have joined this morning's session, so please allow me to share with you a little bit about the JC3. The JC3 was formed in 2019 and co-chaired by Bank Negara and Securities Commission Malaysia, with members comprising senior officials from Bursa Malaysia and 19 industry players. The JC3 is set up to pursue collaborative actions for building climate resilience within the Malaysian financial sector. Before we kick off, let me make some housekeeping announcements. Please note that this conference will be recorded with replays available on the IPFIM website. If you can't hear the speakers, make sure your computer audio is turned on. Microphones for our audience are disabled, but please submit your questions via the chat function. Send a message to all panelists. Attendees are able to change the layout and resize panels on screen. When the videos begin, panels on screen will appear equally sized, but you can manually adjust this to your preference. We will be conducting polls throughout the session, so please stay engaged and participate as much as possible. If you face any technical difficulties, please drop a message in the WebEx chat to the host. For the smoothest conference experience, we would highly recommend using a desktop or laptop when you tune in and ensuring there are minimal applications running in the background. I'd also like to invite you to keep engagement going by tagging us on social media using the hashtag #FinanceForChange. We have an exciting lineup for you in the next couple of days. You will see the agenda on the screen now. This morning, you may have heard the messages from naturalist Sir David Attenborough, Governor of Bank Negara Malaysia, Datuk Nur Syamsiah Muhammad Yunus, and the UK Regional COP26 Ambassador for Asia Pacific, Ken O'Flaherty. Then we had panel sessions covering why and how to begin your sustainability journey. My key takeaway is that we can no longer afford to delay action. The time to act is now, not just because the climate is changing, but financial regulations and consumer sentiments may very well change too, to consider climate and environmental factors. This afternoon, you have split into 5 different segments to dive deeper into specific topics. You are in the segment covering sustainability as a business strategy for financial institutions. In this afternoon session, we have a lineup of experts who have embraced the sustainability agenda and who will share their insights into topics of legal and compliance, facilities management, procurement, human resources, and branding, marketing, and communications. Without further ado, let's dive in. Our first session in the afternoon will be a presentation entitled Examining the Past and Visualizing the Future, delivered by Russell Marsh, Green Finance Lead for the UK Government's ASEAN Low Carbon Energy Programme from EY Singapore, and from EY Malaysia, we have Arina, who is a partner in Climate Change and Sustainability Services. Also joining us for this session is Suzanne Biegel, founder of Catalyst at Large and an expert in gender-smart investing. She will be providing insights on how gender relates to the climate. This presentation sets context for this focus session by talking about general sustainability risks and impact to the financial services sector, adapting business model to sustainability, sustainable finance opportunities, and aligning and setting 2030 sustainable commitments, amongst other things. Since this is a common session to be delivered to all of the 5 parallel sessions being run right now, we had to pre-record it to provide everyone with the same content and experience. Now, let's start the video.
Welcome to this afternoon's session called Examining the Past, Visualizing the Future. My name is Russell Marsh, and alongside my colleagues Arina and Suzanne, I will be presenting for you this afternoon. So firstly, the three speakers you hear from this afternoon are myself, Russell Marsh, and I'm a director at EY based in Singapore. My colleague Arina, who's a director at Ernst & Young in Malaysia, and Suzanne Biegel, who's a founder from Catalyst at Large and a co-founder of Gender Smart Investing. So today we'll be covering an overview of the general sustainability risks and what that means in terms of impact on the financial services sector, how business models need to adapt to reflect that sustainability, and particularly looking at opportunities for sustainable finance, aligning sustainable finance to national 2030 commitments, looking at how you integrate governance and management in terms of looking at sustainability, looking at enablers of sustainability change agents, and then finally, gender and climate investment. So firstly, and I'm going to lead this part of the session this afternoon, just looking at what are sustainability risks and how do they impact on the financial services sector. So firstly, what we're seeing is a range of activities that are creating pressure on businesses to increase their focus on sustainability and ESG. And I think it's pretty clear now that sustainability and ESG is no longer an option, but it's a necessity if businesses want to stay relevant. On this slide, we just outline a number of those pressures that are changing and coming to businesses, and particularly the financial sector, why they need to start really taking into account ESG and sustainability. And that's both in terms of the first one on that slide, in terms of the science, in terms of changing with the warming world, so in particular in relation to climate change. That's leading to increasing prominence and focus on the global agreements for climate change and getting countries to take on increasingly tighter targets for emission reduction. You've then got national governments increasing their regulations around how financial institutions and corporates more broadly should take into account a focus on climate change in particular, but broader ESG. You've now got an increasing demand for non-financial information from investors, all looking to understand the ESG impacts of their investments and asking those companies that they invest in to provide much more non-financial information and much more ESG investment and data as part of their decision-making processes. And we're seeing consumer behavior changing. So consumers are starting to demand more products that provide a more positive impact on the environment and more sustainable products. And so we're demanding that through their purchasing, that they're starting to look at these, adapting to and buying these kind of products. So looking particularly right now, we're obviously in the middle of and hopefully coming out of the COVID-19 pandemic, but the onset of the pandemic and this increased focus on climate change has really highlighted the importance of ESG in investment decisions. And looking at the stats on this slide, what it's showing is how investors are viewing a number of these ESG issues. It's clear that majority of investors are really starting now to look at a whole range of ESG issues, whether that's climate risk and natural resources, whether it's gender diversity, whether it's evaluating companies' non-financial performance. There's a range of different factors that investors are now looking at when they start looking at their operations. And you can see that that has grown over the last couple of years in terms of that slide on the left, or the left of that slide, showing the percentage of respondents in the survey, how they looked at things like environmental, social and governance risk, and that's dramatically increased from 2018 until 2020. And taking that a little bit further, we've now seen that the top identified global risks have shifted very much now towards focused on environmental, social, and ahead of economic factors. And this is a study that was done by the World Economic Forum that's looking at its global risk report. And so if you look at the difference between the top 5 risks on the left and the top 5 risks on the right, it just shows how now extreme weather, climate change, natural disasters are a much higher risk than some of the economic risks that were at the top of the list in 2010. So that's just a clear indication of how global risks are being looked at and how climate change in particular is now seen as a significant risk. And looking at that, and again, in a different way, this is another similar graph from that report from the World Economic Forum in terms of global risks, and showing that the climate action failure is identified as the risk that have the greatest impact and is the second most likely long-term risk that's been identified. And what we've seen, in terms of the global pandemic, we've seen what happens if you ignore the long-term risks of things such as pandemics. And obviously the goal now with the pandemic is to reduce harm or waiting for a vaccine. However, there is no vaccine for climate change. So we need to take action on climate change very differently to how we're dealing with the pandemic. And the other thing to recognise, obviously, is economic activity has bounced back after the financial crisis, and that's starting to see emissions increasing. And so we're going to look at how we can grow the economies, but as we emerge from the pandemic, but without having that similar impact on global climate change emissions. Also seeing climate change impacts are now emerging much more quickly than anticipated. And on the left, just highlights a number of the measures and impacts of climate change. And it's showing that we're starting to see all of those increasing much faster than had previously been seen, whether that's ocean heating, sea levels rising, or the Greenland ice cap melting. And that's leading to things like greater income inequality, higher food insecurity, and increased urbanisation as people have to move away from areas that are going to be subject to coastal flooding in particular. So then looking at, what does that mean? So how does climate change, how do those natural impacts of climate change end up becoming a source of economic and financial risk? And what this slide does is look to just summarise that at a reasonably high level. And what we talk about is two things. We talk about physical risk and we talk about transition risk. So the physical risk is the risk by an actual natural disaster event, so like an extreme weather event, what that actually the impact that can have on the financial sector, again, in terms of having to build back that infrastructure that's destroyed, that's a definite risk and a physical risk on the financial sector. And then you've got transition risk, and this is the risk to corporates about having stranded assets or this move towards a lower carbon economy. So an increase in policy and regulation from governments, emerging technologies that take over because they're low carbon, taken up by the market, and general market sentiment. Again, we talked earlier about how you're starting to see a number of drivers on companies to move towards incorporating ESG considerations within their operations. And if companies don't respond to that, so they can end up, say, having a big financial impact as the products they provide are no longer wanted by the market, or to say the products they produce are impacted by changes in policy and regulation. If you're thinking particularly about the energy sector, obviously as governments increase their focus on reducing carbon emissions from the energy sector, if you've got a high carbon intensive energy sector, that can be a big risk in terms of the speed at which some countries are taking that transition to a lower carbon energy sector. And looking at that slightly different way, this takes us a little bit further. Says, okay, how do we see those climate change effects come through in terms of the economy and financial stability? And looks at, say, both again from the physical risk drivers and the transition risk drivers, where you see, as a result of physical risk, you see this business disruption. You might see capital scrapping, and that will lead to potentially lower property values, lower household wealth, and that can have a link through into the financial system in terms of financial market losses, credit market losses, etc. And then similarly on the transition risk, where you're seeing changes in climate policy, change in technology, change in consumer preferences, you could potentially have stranded assets in terms of fossil fuel generation technologies, some real estate infrastructure, etc. And that can lead to corporate asset devaluation, lower corporate profitability, etc. And then have lead to financial market losses. Then there's obviously feedback loops within that in terms of the financial contagion through market losses and credit tightening, feeding back to the economy. So what you're seeing there, say, is at a relatively high level how, in particular, climate change can have a direct impact on the financial system and a direct impact on the economy, and therefore, how businesses broadly and financial sector particularly start thinking about how can it adapt its business models to respond to that challenge, and in particular also thinking about the opportunities. So what this does is look at, again, how does sustainable finance, what does sustainable finance mean for the full business model of an institution? And what this slide looks to do is say, try and look at, say, across the whole of the operations of a business, what's their role, what's the impact of this continued focus on ESG and sustainability and sustainable finance on that company. And that's everything from, so you've got the business implications and challenges on the left. You're going to, in terms of shareholders, you've got change shareholder goals. You're starting to see increasing shareholder activism, where you've got shareholders who are looking to really change the internal process of the company and get it to take on higher targets, particularly for climate change emissions, through using its ability as a shareholder. You're starting to see new investment products coming out into the market. You've got new terminology, new regulatory requirements you need to understand, and how you can embed those within your risk management system. You're going to have new and change risks. So the risks that you're facing now, and the risks you might face under some of the scenarios for climate change could be quite different. So you need to understand how those risks are changed and how that fits within the company. You may start to see change policyholder behaviour, changed employee behaviour. Again, employees looking to see their company do more in some of these areas. So kind of how do you respond to how employees are starting to view these issues? Your business partner behaviour. Again, working with a lot of businesses. What are they doing? How are they changing their behaviour? How are they responding to these demands? I think also looking at product innovation is not all risk. It's also looking at these new market opportunities. Particularly look around in terms of the energy transition, moving towards a lower carbon economy. The amount of investment, the amount of new technology we're going to need to meet some of those targets is huge, and that's where there's a real opportunity for companies to start looking at where they are now and where the opportunities are in the future, and how they can start to move towards embracing and taking the benefit of those new opportunities. And this looks at this a slightly different way in terms of looking across different parts of how this transition, these strategies for sustainability works across different parts of the organisation. So you've got products. So we know, again, it talked about consumers continuing to demand more ethical and sustainable practice and products, and again being able to have products that meet that need. Within internal operations, again, how can you make sure that your internal operations are becoming more inclusive and environmentally friendly, and having those internal policies that help drive those activities? So, impact investing, where FIs are now looking to invest in projects, companies, or organisations that have some positive social and/or environmental impact. So, looking explicitly to seek out those opportunities to only invest in technologies and companies that provide this specific environmental impact, whether that's renewable energy, social housing, as some examples. Looking at distribution, again, how can you adopt sustainable ways of distributing services? So there's this US bank with its in-app voice assistant, so it provides better accessibility for banking services. And again, just to see how the distribution of these services is changing to meet the needs of retail customers in particular. Collaboration, seeing particularly in the sustainability space, we're starting to see a number of external partnerships between financial institutions to help increase and offer this wide range of integrated ESG solutions. The example we put up here is about BNP Paribas collaborating with Greenly to offer some carbon tracking to its consumers through their banking app. And that's just an example of how collaborating externally can help drive a new product and innovation that this particular institution wanted to deliver. And then policy, again, how you're integrating and incorporating ESG into operations. And a number of banks and financial institutions and others are signing up to various frameworks and strategies to help align their operations alongside related ESG-related causes. I think it's fair to say now that financial institutions need to do more to overcome the barriers and reap the benefits that ESG provides. And this slide looks at some of those. So this integration of ESG into risk management services, so really having ESG criteria integrated as part of their already risk management frameworks to help move their capital flows towards more sustainable investments. looking at addressing gender diversity just beyond equitable workplace ethics. So looking at how you extend some of these frameworks around gender diversity down the supply chain and to customers as well. Common taxonomy, this is often the most difficult one in terms of, again, how do you define what we talk about when we mean sustainable? And sustainable practices and sustainability means many things to many different people. So having an agreement about what is a common taxonomy, what do we mean when we talk about sustainability is really helpful. And also useful to see that there's work going on within Malaysia to help try and develop some sense of what that definition looks like within the Malaysian market. Again, common standards for ESG disclosures. There's a range of different standards out there. And again, having this convergence and global guidance on sustainability standards will make it easier both for the industry to adopt those standards, but also then for the external stakeholders to be able to follow and understand what it is that companies are doing. And then elimination of greenwashing, and this comes up quite a lot in terms of being really clear that what you're doing and what you're promising to you are doing, and the consumers and others can have real confidence in that. Again, the ESG claims you're making are actually backed up by what you're doing. And this is just one example, and I won't bear in this too much, as again you can look at the slides in your own time. This is just an example of where Barclays, a bank, is focusing on products, distribution, impact investment, and policy for its sustainable growth. So how it's looking across all of those issues, both, and a couple of examples we put on the slide in terms of looking at green home mortgages, looking at sustainable investing solutions. It's looked at financial inclusion for the disabled. It's looked at how it works with some financially vulnerable consumers, and it's had an impact eligibility framework, providing clear social, environmental, and inclusion criteria to track and categorize financing volume, so including labeling green and social transactions. Again, that's just an example of how this particular financial institution is looking across all of those different criteria to look at how it can become a more sustainable company and has more sustainable growth. So I'm now going to hand over to my colleague Arina to take us through the next few sections of this afternoon's presentation. So thank you very much for the moment.
Thank you, Russell. And I'm going to kickstart with the next part. What we're going to do for this next session is really to discuss about how, essentially the finance for change can actually drive or rally, direction from all sources, as well as how does it align not just from a national 2030 commitments, how do organizations like financial institutions can drive this, and down to the granular detail of what each enablers or business unit can do. Now, looking at the next slide, when we look at what Malaysia has been focusing on, we do have a commitment to achieve the 2030 Agenda for Sustainable Development that addresses the key mega trends. So in 2021, the United Nations Sustainable Development Cooperation Framework 2021 to 2025, the UNSDCF, constitutes how the UN development system could support Malaysia's strong commitment to achieve the agenda. And it's really very much focused on the aspiration for Malaysia to become a high-income, inclusive, environmentally sustainable, and advanced democratic nation. And what this framework helps is to support, effectively collective system support for the country to address where are the bottlenecks, the trade-offs, the synergies towards the journey, and essentially to also provide the United Nations system support to strengthen the whole of nation approach to achieving these SDGs. And when we look at the diagram here, these are the 6 focus areas, as we can see, and how it's aligned to the 17 SDGs. Now, I just want to highlight that these are the key material issues where we have to actually have a targeted fit for purpose solutions that actually can drive multiple benefits on these areas. So when we look at the population growth and demographic change, there will be certain strategic areas that can also be addressed by the likes of digitalization, how this can actually drive certain microfinance, whether the digital banking can actually drive some solutions towards the new world order, and what are the pressure on the ecosystem in terms of the health requirements, as well as the food security discussions. What are the societal changes and changing face of the customer? when we look at, infrastructures are being reconstructed and re-looked at, to consider the drive of EV infrastructure, or the likes of, upgrading in terms of, not just on renewable energy, but consideration of storage and CCUS. These are the mega projects of technological innovation that will come into play. Of course, the key question now is how does, finance as well as the larger ecosystem bring this change? So looking at, where the funding gaps are essentially focused on, when we look at the statistics that has been put out in place, so according to the UN conference on the trade and development World Investment Report, between $3.3 to 4.5 trillion needs to be mobilized annually to achieve the 2030 Agenda for Sustainable Development. Now, this essentially highlights the funding gap for investment, and this is where the opportunities lies in for not just the public, but also the private sector, especially for developing countries, which is estimated at $2.5 trillion. Now, the graph essentially outlines the 2.5 million, but what we want to highlight is when we look at the graph chart on the right-hand side, you can essentially see where the key gaps are in the power sector, focusing on power sector, and the climate change mitigation, transport, telecommunications, and ecosystem or biodiversity. So this is where, the focus areas, and the growth drivers are going to be, angled by most investors as well as companies on this journey. Now, when we look at examples of how financial products and services can essentially drive, or address the sustainable development goals, for all these 16 goals, including the 17 on partnerships, the focus areas essentially, when you look at no poverty, it's essentially driving finance through impact investing. I mentioned about microfinance for smallholders farmers can actually support the goals towards zero hunger. And when we look at healthcare investments, it does essentially drive good health and well-being. And this is where there are digitalization in terms of telemedicine, having the digitalization that will actually help the outreach for those underserved. And when we look at philanthropic donations to schools, it doesn't stop there, but it could also be enabled by digital education. And when we look at microfinance and lending to women and female entrepreneurs, that's where it would drive gender equality and keeping women and the underserved to actually have continuous career to support their family income. And then when we look at clean water and sanitation, this is where socially responsible funds can invest in water and sanitation, and this can also drive access to businesses as well for the underserved. And for affordable and clean energy, I think we mentioned about renewable energy investments and new technologies. For decent work and economic growth, there are general investments in real economy. For innovation and infrastructure, it would be essentially relooking at how project finance or commercial can lend and integrate ESG criteria in their lending decisions, which we will see a huge significant ramp up in this year for the financial sector. And in terms of reducing inequalities, it's essentially to drive fair payments, not just for financial sector employees, but also to drive it, in terms of the investees or the customers that you're lending to. How do you then advocate for those policies? For sustainable cities and communities, it's also considering, how do you look at the mortgage lending to provide more climate resilience enablers to actually discuss on how climate risks are being mitigated and adaptation considerations. For responsible consumption and production, is essentially driving the socially responsible investing. Climate action will cover in more detail, including financial ecological services that covers life below water and land, and essentially, lending to public institutions to consider for, driving peace, justice, and strong institutions. So when we look at, how sustainable finance have become urgent to achieve the low carbon economy, essentially is also looking at, how it is already impacting, if not every aspect of the economy. So I mentioned about, the connectivity, not just on agriculture, residential, human health, labor productivity, but what essentially would be key is what are the societal issues or environmental issues that has to be tackled. So these are the key questions to ask, as part of the organization or as part of society is, should leadership on environment or social issues be an essential part of the purpose of the organization? what are your current engagement on environmental and social issues, whether it's authentic to your culture, brand, and your products? How do you play an active supporting role in transitioning to net zero? Every organization has its roles and responsibility, but how do you integrate this within the organization in the day-to-day operation? How does sustainability intersect or influence the business strategy and operating models? And how do you determine this climate change will impact your business model? Now, when we look at the type of sustainability commitments that can actually drive direction in the organization, these are the various areas that actually can be contributed by financial institutions. I won't go through it all because I mentioned it earlier, but in terms of the decarbonization commitment, I think there has been a lot of questions in terms of what does each commitment looks like. So we thought, it would be timely to actually just highlight here that there are various iterations of what a decarbonization commitment looks like. Here we see carbon neutral, carbon negative, net zero, and science-based targets. Having that different equation or iteration, whether does it cover emissions, is it being offset by removals, or it can be offset with science-based targets. So these are the 4 different iterations, and organizations need to then define which one works for them in order for them to consider what commitments are most reflective of their vision, mission, and their direction in the short, medium, and long-term future. So when we move on to the next part, after looking at the macro scenario, now let's get on to the institutionalizing, how do we then bring this into the organization, going to the granular detail. So when we look at the integrated governance and management approach towards sustainability, I would like to just keep the key focus in the next slide. Okay. So when we look at the governing body or audit committee and consideration internally and externally, when we look at the organization, typically for financial institutions, there is the essential 3 lines of defense. You have the management controls and internal control measures as the first line of defense, where they carry out the sustainability risk assessment when onboarding clients during pandemic review or existing clients. Now, the idea is also then apply that for environmental areas and to also engage with clients to understand their level and business plans and to consider the uncertainties. When you look at the second line of defense, essentially it's also the second part of the organization that looks at the financial controller, security, risk management, quality, inspection, compliance. How did the second line of defense actually set up their own central risk frameworks, deliver the training, develop scenarios, and undertake stress testings. And these are the part where it goes to the third line of defense, where you have the internal audit as well to review the control, design, and execution. What's to highlight here is this does not stop there. There is also the external audit consideration and the regulators who will also evaluate from the external viewpoint of things. Now, when we look at how this will actually change the approach, essentially learning from what the pandemic has impacted in terms of the governance, it has reinforced the importance of the long-term value approach to actually build resilience. And in terms of the drivers of the approach are pretty much the key stakeholders and the business leaders, where there are increased expectations, where organizations need to play a more proactive role in tackling the societal issues, including climate change and inequality. And you also see business leaders who now start to, have that conversation, how the CEOs and board are connecting and driving the sustainability performance strategy and targets. What's their role in driving, having a more purpose focus, to address the various key stakeholders' needs. So this essentially, outlines a research that was done by EY that actually highlights, to what extent the board has put in place the following practices. We can see that there is a growing, based on, long-term value maturity, there is a growing need to actually evaluate, what the strategies are in terms of improving the long-term value. And where we see the laggards are is essentially also considering, how do you then incentivize, the remuneration schemes to ensure that this long-term value are being driven internally and they're being compensated as well, aligned to actually ensure the longevity of the organization. So when we look at the framework, how to integrate the approach to address sustainability, typically it cuts across 2 aspects. One is on the strategy, one is on the compliance. When we look at the strategy governance, it is also to look at how do you drive that proactive, taking, certain risks, looking into ventures, where the sustainable finance, where the risk and strategy and opportunities lies in, what are the transformative that the organization need to look for. When we look at the compliance side of things, essentially you have the board risk committee that actually looks at, where the risks are, as well in terms of the stress testing, the financial capability, and where the portfolio would look like. So these are the two hats that typically would be institutionalized within an organization. There is a part where the more proactive pursuit and risk-taking side of the business, and there is the other part that is a more risk, management kind of approach. But essentially, this falls within the organization, essentially, and how this is being driven is to really have that two enablers within an organization, rather than just have one set up. So the eventual integration to the business functions as well as rules needs to be clearly outlined to actually drive an effective integration. So when we look at, breaking down even further what the enablers or sustainability change agents are, this is where we look, into the setup organizational function, where we look at, where every facet of the organizational and operational structure is affected by the ESG. And we can see that, from the high level to the board and supervisory board level, you will then need to consider now in terms of the how the board drives sustainability strategy, performance, and targets. You will also consider how the board risk committee will actually evaluate risk, but you will also consider now for remuneration committee, how do they connect the performance of the board and senior management as well. So this is where the high level set infrastructure would be before it's trickled down to the next core process as well as the supporting process. The core process, essentially, when we look at product management, it would be looking at the various sustainable investment. How do you consider the green and brown assets and greenwashing? Where you talk about marketing, there's also market position. Where do you communicate your performance? How do you manage the engagement with your internal and external stakeholders and the regulators as well? And in terms of the sales, is essentially to drive, what are the financial advice that you're going to give to your investees, what are, as well as to your customers, coming up with various products that actually fit their needs, and considering whether is there opportunities to drive new technologies as well in terms of sales. And in terms of processing and handling, there is, the discussion of the conflict of interest, taxonomy, what's the use of funds, and when you come to customer service, it's essentially how do you handle the grievance mechanisms, the complaints and the governance structure. So when we look at the support processes, these are essentially where the other parts of the functions of the organizations is the legs, the arms, the heart that actually need to also rally together. This is where you see in terms of the laws, the regulatory affairs, the finance, the compensation incentives needs to now come together to actually see how they can actually consider the advancement or the components of ESG into how they actually operate, incentivize, provide legal advisors, handle the business operations, whether, when you look at asset management, how effective are the assets and how resilient is it, towards flood, climate risk. So these are things that needs to be considered. I will move into more detail when we talk about these aspects. When you look at integrating sustainability into procurement, what we see now is essentially the drive on improving global human rights situation, and as well as fostering the UN SDGs. So it's also considering, what are the greater responsibility to contribute to climate protection, material efficiency, what are the social standards and good governance that needs to be driven in the supply chain management, as well as, when it comes to risk mitigation, how do you ensure the security of your supply chain? How do you maintain the license to operate through management of ethics and regulatory framework? But when it comes to, what sustainable procurement really means is essentially to have clearer transparency, have a clear monitoring material sustainability risk in the value chain. And what we have seen is most organizations are starting to come out to see how they set the standards for their sub-suppliers. They would evaluate and say that, how many has been, not meeting the standards. Hence, therefore, they are being coached or they're being advised on how to enhance, the supply chain standards as well. And when we look at where the opportunities lies, essentially is to drive profit in terms of efficiency, accelerating the sustainable business solutions, to actually handle significant perception. How do you position in the market for transparency in your supply chain management, and to essentially also grow and drive the performance, attracting new talents, ensure customer satisfaction, that you are essentially the brand to come in together and be aligned with. Looking at, in terms of building facilities and management, the consideration is the need to actually plan and mitigate physical risk on your buildings and facilities. We had the flood in January, a massive flood, and a lot of operations and branches of financial institutions are impacted by flood. The question then is, how has those been factored in and considered? And when talk about, energy, carbon, and environmental taxes, how do you consider that as well, impacting your transition risk? And in terms of smart building and energy efficiency, we're seeing quite a number of retrofit being done on buildings, and the shift to renewable energy, putting solar rooftop panels, and as well as driving a lot of energy efficiency with automation in the smart building elements of the operations. So in terms of occupational health and safety with the COVID, there's also a need to have the awareness, well-being, and there is a discussion on as well on driving mental health and well-being concerns, especially in the lockdown situation. So what building and facilities management needs to have in terms of consciousness is really to invest in green technology and assets, consider what are the ways to actually coordinate the carbon footprint and energy audits of the assets, and what are the environmental health and safety considerations in the supply chain when people visit your facilities and building management. Where the opportunities are essentially with all these automation, it can actually optimize energy, carbon, and environmental taxes. And essentially is also to drive and reduce exposure to environmental disaster. You can actually help to actually drive renewable energy where it can be managed in a larger scale, and it as well as handle the facilities for effective employee management. So when we look at integrating sustainability into human resources, what we see in terms of the drivers and trends are the digital and technological advancement in having better digital tools to enable the mix of on-site and remote working, which is quite critical in this space of in the current situation of lockdown. But with that rise up in terms of digitalization, there's also concern on cybersecurity and data privacy. There are also discussions about the issues surrounding digital inequality and social fragmentation, driven by educational disparities, unemployment, and gender and inclusion issues. So this is where it's essentially the human resources can also consider what the new climate economy would look like in terms of generating more jobs or new jobs, or how employees could then pivot to the new requirements of the low carbon and energy kind of low carbon economy kind of green jobs and green skill sets. So this transition is also to consider whether it can actually boost female participation to ensure a more inclusive employment landscape, and what are the new skill sets that comes with it. In terms of what sustainable human resource management would look like, is essentially to look at how they can reevaluate how the mobility strategies are being put in place, incorporate the risks and opportunities capability building cut across the organization, promote gender inclusion and equality in workplace, encouraging volunteering and green champions within the organization, drive sustainability training as part of a fundamental onboarding training, provide adequate training, educational opportunities to boost adaptive capacity and reduce the vulnerability of them losing jobs in where we pivot, and linking, more importantly, is linking remuneration and promotional opportunities that comes with sustainability practices. So when we look at opportunities, it's essentially capitalizing the gains from remote working to actually boost morale, motivation, and contribute to sustainable business by having more efficiency, creating green new jobs and allowing employees to pivot. It will definitely increase the market branding or perception of the organization when you clearly drive these values and have a clear ways to actually drive transparency in how you actually mobilize sustainability considerations in the organization. It will also help you to attract talents, have a diverse talent pool, and also reduce the needs of paper consumption, mobility, travel needs in that respect. So when we look at the next part in terms of the legal and compliance, what we see is, as I mentioned, a global direction to improve human rights situation. In terms of regulatory, there is increased regulation and standard setting that actually, considers ESG management at the governance infrastructure. How these standards are being implemented, as well as how the communication are being done in an effective manner. How do organizations take responsibility on ESG management risks and opportunities? And it's always essentially as well to handle the greenwashing risk. And now we also hear the social washing risk as well coming up, and to also consider what are the risks of damage and litigation due to the externalities, climate change, and natural disasters. So what the sustainable legal and compliance would then look like is really to have that capability and competency to scan and understand what are the risks that affects the companies, to also drive, how they can operationalize and manage the stakeholder expectation. We've seen more enhancement on having a stakeholder management strategy and policies being put in place, as well as having the knowledge, of the entire legal team to be aligned to sustainability issues management, and to also regularize the internal engagement on sustainability issues. And moving on to opportunities, what we are seeing is it would help to mitigate the cost of non-compliance with any ESG laws and regulations, to also grow and improve the inclusiveness of the policies, to drive connectivity in having a diverse talent pool intersecting with human resources, and to manage the transparency of disclosures and strong compliance with laws and regulations. Now, last but not least, in terms of marketing and branding, which is essentially quite critical for most organizations, is there are increasing negativity in terms of publicity as associated with poor ESG risk practices. There is also a consideration of whether there are greenwashing, or essentially not having that transparency in, for example, the products that is being put in place, or the green investments that you actually commit to. So this is essentially to also understand what the customers, regulators, investors, or all stakeholders are now looking for. What are the information that they are requesting to be put forth to public, and how the COVID-19 has accelerated the momentum to have ESG being brought up to a higher increased bar of how these financial institutions are driving the force of change. And you see that in terms of the platform infrastructure that marketing and branding are using, there's also an increased online banking apps. So this will actually need to weave in the consideration of how you actually communicate ESG management. Now, in order to look at how a sustainable marketing and branding will actually evolve, there would be a clear direction to actually enhance ESG transparency, ensure that there are specific tangible commitments and goals that aligns and connect to the products and services that are being offered. And you can essentially, the organization communicate the results and outcomes in a timely, effective manner with clear timeframes. There will also be a significant increase on how do the organizations educate customers on the benefits of ESG products, as well as embrace the digitalization to provide the enhanced value as well. Of course, when you look at the opportunities, it would help to actually enhance your market positioning. When you offer measurable results to support your commitments, you are also able to then look at what are the various avenues of customer satisfaction that you actually can capture. And most organizations we see in the market who are leading on marketing and branding, they start to put out in place how strong do they evaluate their relationship with key stakeholders. So this is where the strength and the surveys and evaluating the stakeholder management strategy comes about, and how do you then inform that results to the public. So with that, I will pass on to Ms. Suzanne Biegel, who's the founder of Catalyst at Large Expert, to actually take us through the Gender Smart Investment chapter. And over to you, Suzanne.
Good afternoon, all. I'm so delighted to be here to speak with you today as one of the technical partners for the ASEAN LCEP, and I want to thank EY. My name is Suzanne Biegel, and I'm the co-founder of the Gender Smart Investing Summit, a global initiative to unlock gender smart capital at scale. And today I'm going to speak with you about the nexus of climate and gender finance and the urgency and importance of bringing these two themes together. And I'm going to be pulling from our report, Gender and Climate Investment, a strategy for unlocking a sustainable future. Next. Let's get started by talking about the context for the growth of the field, the urgency of why it's so important to consider the nexus of gender and climate finance, and dive in. Next. You've already been speaking about climate change, climate finance, but most climate finance is not yet gender smart. Next. There's a huge demand, of course, for climate finance to facilitate and accelerate the transition to a low carbon economy and a resilient economy. And at the same time, we need to be conscious of how climate impacts different communities disproportionately. The poor are especially vulnerable to the effects of climate change, and the majority of the 1.5 billion people living on the planet under $1 a day are women. Gender-based differences in women's and men's vulnerability, as evidenced by mortality rates and extreme weather conditions caused by climate change, stem from gendered norms around mobility, skills, employment, and other factors which limit women's participation and access to resources and economic opportunities. But we must not only see women as victims of climate change. Tackling gender inequalities can positively influence climate action. And as a study from the IMF shows, policies that improve access to educational opportunities and finance for women can lead to a reduction in not only inequality, but an increase in economic growth for the developing country. One Brookings Institution study suggests that for every additional year of schooling a girl receives, on average, her country's resilience to climate disasters increases. Why is this? Because she can make educated decisions about sustainable choices and preparedness, resiliency. For example, an educated farmer can make different crop decisions in financing and irrigation. Next slide. Finance can deliver enhanced climate and gender impacts, but beyond this, climate and gender investing is just smart investing, period. And by bringing these lenses to bear on investment decisions, we see the potential for increased returns and decreased risk. And we've articulated 5 reasons. This is not a hierarchy. We believe these are all important, but these are some of these are more relevant for others in looking at different investment actors and actions. First, integrating climate and gender investment approaches can help to uncover new investment approaches. Women innovators and entrepreneurs are creating disruptive solutions, and addressing gender in a product or service solution can unlock products and services that are more responsive to market needs. It's also about mitigating risk. Climate risks cannot be diversified away. They affect all businesses, whether directly or via customers, suppliers, and communities. And failing to address gender can be a source of market risk, operating risk, or even reputational risk. Companies or funds may fail if they brush off the gendered needs of employees or customers or suppliers or other stakeholders. And gender smart and climate smart investing provides ways of mitigating those risks. It's about meeting investor expectations. It's about driving long-term value, because a gender and climate lens can drive competitive advantage and long-term value across talent, innovation, markets, products and services, value chains, and governance. And as climate and social impact enter mainstream thinking, regulation, and policy, those who fail to adapt at risk falling behind. And finally, of course, amplifying social impact. Looking at gender equality and climate action cuts across so many other SDGs, and all development finance, and indeed all finance with the SDGs as an objective, is beginning to recognize that gender is a cross-cutting theme. So we believe that long-term, there'll be a correlation between these companies driving positive social returns and having an increased impact on financial returns. Next slide. I want to share this quote from Mark Carney, which you can read yourselves. the UN Special Envoy on Climate Action and Finance, and former governor of the Bank of England. Mark Carney is an international gender champion who is pledged to champion the use of the 2X Gender and Climate Task Force tools on climate and gender, and to champion better access to climate risk training opportunities for central banks and supervisors, particularly in emerging markets and economies. Next slide. Both fields are growing fast. I don't need to tell you about the growth of the climate finance field, but I will tell you about the gender lens investing field. We estimate that by the end of 2020, there was more than $18 billion in public and private investment vehicles moving with a gender lens. And this chart illustrates the growth of those vehicles. And these two areas of climate and gender have tended to operate in silos, but the integration of the two can unlock tremendous opportunities. So we ask ourselves, what if all of the capital flowing into climate finance today had a gender lens? To build a realistic picture of the opportunity to bring these together, critical data gaps are there, we recognize that, but we have the opportunity to be carving out new solutions and examples across ASEAN. Next slide. I'd like to take a second to highlight the ASEAN region as an example of a way to bring together gender and climate. The East Asia and Pacific region is the largest provider and recipient of climate finance globally, with 250 billion USD, comprising 44% of total flows. And gender lens investing is up 160% in ASEAN, with 22 active gender lens investing vehicles across public and private markets at a total of 1.1 billion USD. In addition, annual flows of 250 billion into climate-related projects represent a huge opportunity to significantly scale up gender lens investing in the ASEAN region, although it hasn't happened yet, through ambitious gender-related KPIs being intentionally integrated across all climate finance by default. And some of the public capital providers have made some commitments in this regard, but to date, this opportunity really remains largely untapped in the ASEAN region. But it presents a significant opportunity to be a leader, both for women and for the world, and for climate outcomes that we're really looking for. If you go to the next slide. I want to talk a little bit about some of the principles around applying these lenses. Next slide. So this is about bringing together a climate and gender lens together, not only in what we're investing in, but who has a seat at the table, and what kinds of companies, what kinds of funds, what kinds of ways this comes out in the infrastructure project, and where financial institutions have a role to play. There are a few different ways to think about this. One is to apply a gender lens to climate finance, existing climate finance, and to think about how do the company's products and services or value chains really impact the lives of women and girls. You can also apply a climate lens to gender finance, so thinking about where gender bonds, gender-specific investment vehicles are, and think where are the green opportunities within those opportunities. And then really thinking from the very beginning to bring gender and climate together, are there gender-specific opportunities to improve climate and business performance? And what would you look at? You would again look at leadership, you would look at governance, you look at supply chains and employment, you look at customers and communities, and you'd be thinking about where might I be spotting an opportunity by paying attention, or spotting an opportunity by spotting a risk where I'm not paying attention. And I'll get into that a little bit more. Let's go to the next slide. The key actors in this ecosystem are, of course, all of the finance providers and capital providers, from the central banks, the DFIs, foundations and family offices, the fund managers, but the intermediaries, the coalitions and networks, the consultants and advisors that are bringing these kinds of products to market, and the movement building actors. And then finally, of course, on the company side, to really be looking at businesses across ag, across energy, across transport, across manufacturing, circular economy, sustainable cities. And I'm going to talk a little bit about how this comes to light in that ecosystem. We go to the next slide. Money's already moving, and pioneering investors are leading the way here. So the DFIs, there is a set of DFIs that have collectively committed 15 billion in capital to move with a gender lens and significantly as well with a climate lens. In 2018, they made a commitment to move 3 billion in this direction and had already moved 7 billion by the end of 2020. So this 15 billion is a new commitment. The multilateral development banks are now part of that new commitment, but they've already been acting. EBRD, European Investment Bank, IDB Invest in Latin America, the IFC, Asian Development Bank, and African Development Bank. And then funds, there are a tremendous number of funds. We're tracking more than 25 funds around the world that are already deploying climate and gender lens. And I'll talk about a few of them. And then, of course, across public markets, looking both at climate and gender in an ESG context. If we go to the next slide. So you can be thinking about this from this point of view of spotting who are those entrepreneurs and innovators that either we need to be backing through venture capital, private equity, through bank finance. They could be in corporate supply chains, it could be in public sector supply chains. It might be that it's a women-owned business or women co-founded business. It might be that it's really about women in leadership. It might be about the fact that their products and services are very focused on paying attention to women customers as well as male customers. It could be really thinking about where are women in those supply chains, again, either as owning companies or as running companies or as employees in companies. So we're thinking about all of those lenses. And if we go to the next slide, and across, as I mentioned, every area of climate finance, from energy to ag to water to transport and on. So this is not just siloed in one particular area. Let me tell you about a few case studies. Agence Française de Développement, if we go to the next slide, has been working to scale up gender finance through mainstreaming gender considerations in all new sustainable bond issues. In this case, the use of proceeds bond. This would mean including requirements on gender diversity in the eligibility criteria used for the selection of projects. For sustainability-linked bonds, this would imply using an additional set of key performance indicators and sustainability performance targets in the gender bond framework, along with the environmental or KPI, the environmental or social KPIs. The integration of gender considerations in the green bond framework is a novel idea. Therefore, to date, there have not been very many examples that can serve as best practices for other green bond issuers. However, there's some promising examples. Agence Française de Développement has developed a new SDG bond framework for green, social, and sustainability bond issues in October 2020. To date, AFD has only used this framework to issue an SDG bond. Therefore, instead of a green bond, this will be used as an example of how a green bond framework can integrate gender targets. Considering that AFD has been an active green bond issuer with a total insurance side of euro 3.25 billion since 2014, we might see new green bonds using this new framework later this year. And among other eligibility criteria, the bond framework requires new projects and loans to receive a neutral or positive grade in 6 sustainable development dimensions, which include gender equality alongside climate objectives. So we're thinking about access to services, control over resources and income, access to justice, combating violence against women, participation in economic, social, and political decision-making bodies, and project governance with regard to gender. If we go to the next slide, Schneider Electric, a French company focusing on energy management and automation, can use the proceeds of their sustainability-linked bond for general corporate purposes. And at the same time, it has a strong incentive to meet the SDGs it is committed to in its bond framework. If it doesn't meet its minimum KPI score threshold by 2025, there'll be a margin step up or a premium payment as outlined in the transaction document of each issue. And the KPI minimum score threshold represents on average an 85% achievement for each KPI, which corresponds to an average score of 9 or 10. This is calculated by first giving a performance score to each KPI on a 10-point scale. The equal weighted average of the scores for the 3 KPI determinants determines whether the KPI minimum score threshold has been met. And Schneider's example to show how you can integrally link a gender KPI, a climate KPI, and a training, an employment KPI is a model. that you can really look at. Next slide. There's no single path to an integrated gender and climate investment approach, but the risk of waiting for the perfect opportunity or data or project outweighs the benefits of acting now, whether testing the waters with a pilot project or scaling up what it is to be done. So I hope this has given you a little bit of a flavor for how we bring gender and climate finance together, and I wish you good conversations this afternoon.
Thanks, Arina, Russell, and Suzanne. I hope you all found this session useful in understanding how the finance sector operated in the past was not ideal, and how the current climate crisis sends a wake-up call that environmental and social risks are real, present, and relevant to all. Let's begin our next session. Our speaker is Anandarajah, Partner, Head of Competition and Antitrust and Trade with Rajah and Tann Governance. Kala is described by clients as having unrivaled knowledge and understanding of the law and uniquely able to understand very complicated businesses and their likely reactions. Her expertise, thought leadership, and dedication have been lauded by numerous publications, including Chambers Asia and Who's Who Legal. In her presentation, she will be discussing embedding sustainability into the legal and compliance aspect of the organization. Kala, you have the floor.
Hi, very good afternoon to everyone. Thank you very much for that. Now, I've got about 15 minutes to get this session done. So I'm going to try and zip through the issues. And, if you had points that you want to discuss and so on, happy to take this at a later time as well. Now, sustainability is a topic. Sorry, I'm just trying to make sure that I get control of the slides, but it works. Okay, so sustainability is a topic that has garnered a lot of interest, particularly in recent times. The term sustainability has become a topic that corporates take very seriously, primarily because of disclosure requirements if you're listed, but quite apart from that, as part of the entire supply chain as well, sustainability has become something that parties do demand. Now, what I'm trying to do here today in the 10 minutes or so that I have is to look at the legal elements that come out of sustainability, and then to talk a little bit about compliance issues, and essentially to say,
Kala, I think you have gone on mute. Hi, Kala, can you hear us?
can you hear me now?
Yes, go on. Thank
Okay,
you.
brilliant. Folks, technology, right? I've been talking on the system for so long, my battery ran out on my other headphone. So I'm glad you can hear me now. So let me start just on this slide again. Now, what is sustainability? On the left-hand side, I have a definition put out there, which talks about the UN, which comes from the UN World Commission on Environment and Development. They define sustainable development as development that meets the needs of the present, yours and mine, without compromising the needs or without compromising the ability of future generation to meet their own needs as such. Sorry. That's the definition that has been accorded to sustainability, and that makes a lot of sense. But a lot of people look at that and then they say, it's environmental related. And is sustainability about climate change? Is sustainability about the environment? I take the view that it goes a lot further than that. Now, before I get into that, if I just point you very quickly to the definition on the right-hand side. That's a definition which was put together in the very early 90s, 1992, I believe, in relation to what corporate governance meant. And corporate governance is defined as holding the balance between economic and social goals, between individual and communal goals. And if you compare that to the definition of sustainability, it's kind of the same, right? So corporate governance, we were looking at the similar issues as what sustainability is talking about right now, in a sense. And if you go on and read the definition, governance framework is there, a governance framework, which to me is critical for sustainability as well. But it's there to encourage the efficient use of resources and equally to require accountability for the stewardship of those resources. So I'm using resources, and I want to ensure accountability as well. And really the aim is to align as nearly as possible the interests of individuals, corporations, and society. I will pause there on that definition as such. Really the reason for sort of putting the two side by side is to say that although we are using the word sustainability today in 2021, 30 years ago when we were talking about corporate governance, and that's an area that I grew a deep expertise in, we were already looking at the balance. Now I move on very quickly to my next slide. And just at a very high level, and the previous speaker kind of talked to a lot of these issues, so I'm not going to go into the details, but really when you look at the landscape as such, sustainability has somehow or rather kind of turned towards looking at environmental concerns, be it physical risk that arise because of extreme weather, be it because of litigation that's coming out because of liability issues, or be it because of transition risk potentially. And I've listed a whole range of different steps that companies are taking to try as best as possible to evolve their sustainability practices as well. That shows you the momentum there is. Taking sustainability from an environmental perspective, keeping it very narrow. And yet, my view remains that sustainability goes a lot further. Sustainability is in fact multifaceted. Sustainability extends to social equity, it extends to environmental protection, it extends to economic viability. My slide's been readjusted a little. Anyways, the three key pillars, and if you look at literature, there'll be 5 pillars and 7 pillars and da-di-da and so on. I just want to focus on the 3 key pillars. One is the social issues, the social compact as such. The other is the environmental elements that we cannot run away from. And then it's economic viability, which is really at the end of the day, we are looking to make profits. We're looking to grow corporations. It is not to try and ensure governance and sustainability is managed at the expense of business profits. We want to link the two together. And in terms of growing profits, at the end of the day, there are 2 levels to it. One is I look at efficiency. I look at how to increase my returns coming in. The other is I look to cutting costs. Sustainability touches on that second element as well in terms of cutting costs. And much has been said and will be said today, so I won't spend so much time on that, but again, happy to take offline discussions. In terms of getting into, so there are a couple of questions that are coming in which are very good, and I'll touch on it in a little bit. Actually, maybe before I go into how do I achieve the two, looking at it at a national level and a supranational level. When I talk about sustainability, there's also this concept of ESG, which has now taken center stage. ESG meaning the environmental aspects, the social aspects, and the governance aspects. A little bit of what you see in the circles that I put together to emphasize the environmental aspects. The E is really in relation to seeing how you can manage the energy in your corporations better, manage the waste that you're going, or reduce the waste that you're going to be discharging, or to see how you can recycle that, for instance. E also encompasses carbon emissions, climate change, and carbon emissions goes into a whole range of other issues like carbon trading and so on, where I do work in. Moving into the S is really about the relationships. So very much like what Sir Adrian Cadbury had said. It includes labor relations, it includes diversity issues, inclusion issues, and then governance at the end of the day. Governance to me is always important because it puts into structure processes in place to ensure that there are proper controls and it is, in a sense, managed as such. Now, moving along back to the specifics in the slides, how do you achieve this? You can do it at two levels, national level or supranational level. Education, obviously, awareness creation, obviously. The social compact, very important. We need to tighten that further because then it comes from the inside. But then the laws and regulations as well. Now, in terms of laws and regulations, because that's what I've been told to focus on for today, I'm looking at legislation, regulation, industry codes. Really, how do countries come together and put together laws to try and manage sustainability issues? I'm sorry, I'm going at a bullet train speed because I'm trying to compress 20 minutes into 10 minutes. Some of the relevant areas of the laws: environmental issues, green buildings. This is huge in Singapore. Resource sustainability. Singapore is one country where we have legislation introduced to manage resource sustainability. I looked around ASEAN countries and from the work that we've done as well, there hasn't been legislation to the extent of the one that has been introduced in Singapore. A lot of the focus is very much on environmental issues, pollution control, managing air quality, and so on. And that's in the first category that I talk about. But areas of laws go further what I talk about in terms of green buildings, resource sustainability, carbon pricing, carbon trading. It also talks about how I move from one country to another, how hazardous substances move from one to another, how haze air moves from one country to another, and dealing with all of those issues as well. That takes me into a supranational level. Corporate governance concerns, processes, procedures, but we need rules, we need laws. For companies which are listed, there are additional guidance provided through your listing rules as well. And then reporting requirements. If I move that into policies and risk management issues, it's to cover whatever I've highlighted as far as the laws are concerned, but also specific issues as carbon trading. How do I deal with it? How can I convert something which could potentially contribute towards the environment into a business credit that I can use to grow sorry, there are quite a few questions that have come in, and 20 minutes or 10 minutes really that I have is not sufficient to answer them. So I'm going to request that the questions be sent off to me at a later point in time. Now, what I wanted to emphasize in relation to policies is, quite apart from external legislation, some of these need to be put together as well. Contractual requirements have to be spelled out as well. Now, when I talk about contracts, it's really not at the government level where they're issuing guidelines, but along your supply chain as you enter into agreements, how you manage your suppliers or your downstream customers, are ways and means of contributing towards a better sort of sustainable practice. When you take it into financing your loans that you're going to borrow as well, ensuring that the financing is in relation to projects which are truly sustainable. So if a project is not going to be used the most efficient energy, for instance, should that project receive the same level of financing or the same set of credit terms, for instance, as a general project, for instance? Those are the complex issues that you really need to be thinking about as I talk about policies and managing risk concerns. Now, if I move on, just at an ASEAN level, what I've been talking at the national level, just pulling it up into the ASEAN level, you see that many of this relate to focusing on the environment. I do not want to belittle this because it's absolutely critical, and it is that important first step that you in the sustainability journey as we look at ESG as a whole. Again, I've just named the key sort of papers that have been put out at a ASEAN level for now. Time does not, unfortunately, permit me to go into details. Now, as I talk about the sustainability journey, right, one important thing to recognize is that there is no one size that fits all. And every industry is going to have a slightly different approach to be taken. The nature of the business would mean that how you implement such sustainability within your organization is going to be different as well. If I'm a construction company, if I'm an infrastructure company, it's a lot easier for me to say how I'm going to implement sustainable efforts. If I'm a law firm, it makes it a little more complex. Not that we can't, we know what we're doing, and it's an important journey within my firm, but the processes are different. The other important thing that makes compliance very difficult is that sustainability really, in a sense, goes beyond climate change. We need to recognize that climate change is important. The social compact that I talked about, it's to a large extent being pushed by proponents for managing climate change concerns. And it's a good thing. However, sustainability goes beyond that, and we need to manage that. Sustainability also means responsible investment. And responsible investment, as I very quickly highlighted just now, perhaps we need to have different structures, different terms and conditions for different types of projects that we are financing, in a sense. And then at the end of the day, it's really about balancing the two, profitability vis-a-vis ESG issues. All set, the supply chain is the most critical. I think if I'm just taking a very practical business perspective, right, where I'm sourcing my resources from and how that contributes into my business is going to be very important. And I don't think sufficient attention is being paid into that. You know, we can say that I'm in this space where it's going to be near impossible to implement a process. But really, you can introduce policies to make sure that where you're procuring your basic paper, your other daily use resources to advance your business comes from a green source. That's how you contribute. The policies you put in place in your company ensures that you're achieving that. It contributes towards your compliance process. And downwards as well, as you sell, to ensure that your subcontractors below you, your customers below you, follow through with your processes, otherwise do not work with them. It is a journey, but it's necessary. And unless we get that supply chain structure right, compliance is going to remain very, very complex. Now, I know that there are several questions that have come in, and I do apologize that I do not have time to take them. I do not want to push back the next speaker's time as well. So I'm going to pause here, but I'm happy for you to reach out to me offline, and I will be happy to respond to many of your questions. Thank you very much.
Thank you, Kala, for your expert insights and for addressing the questions in the chat during your presentation. We have so many, and I'm sorry that we can't address them all. I hope that gives you all an idea about where and how to start incorporating sustainability into legal and compliance functions. A key takeaway is that there is no one size fits all, so we all have to put in the hard work to find solutions for our own businesses, and that includes knowing when to involve experts to help us. I noticed that we also received some questions on guidance on climate disclosures and embedding climate frameworks into businesses. We will be addressing some of those topics in tomorrow's session, so please join us then. Now, moving on, our next speaker is Michael Long, Head of Sustainability of Lendlease Asia. Michael works across Lendlease's core investment management, development, and construction businesses to integrate environmental sustainability, social impact, and good governance into investment decision-making and operations. He is currently working on business transition plans to achieve net zero carbon by 2025, absolute zero carbon by 2040, and creating $250 million of social value by 2025 across Asia. Michael will share his experience in embedding sustainability into facilities management functions. It's my pleasure to pass the mic to Michael for his presentation.
Hello, and thanks for having me, everyone. I'll just wait for my presentation to show, and then we can kick off.
Michael, can you press next? You have the control now.
I'm not seeing where I'm controlling from here. My apologies. No, I'm not being able to change the slide on the screen.
Hi, Michael. Do you see like a bubble on the left side of the screen? So you'll be able to see the up and down arrow. So that's how you'll be able to manage the slide.
Okay, let's try here. Okay, okay, lovely. Thanks to everyone. I'm keeping on the time here. So look, I will do my best to answer a lot of questions, and hopefully we'll keep this discussion engaging. And look, what I'd really like to do is give you a bit of a feel of some detailed aspects of sustainability. In particular, I'm going to focus on climate resilience and the role of finance and built environment. And I'll walk you through a little bit of how it applies to the Lendlease organisation, but also just give you a feel of, from a practitioner's point of view, if you're operating in industry or you're dealing with financial decisions or you're looking at providing finance or you're looking at new investment decisions, how these things can apply from a risk and opportunity perspective in the built environment. Okay, so okay, so what I'm going to walk through is I'm going to talk a little bit about targets in an organisation, talk about governance, bit of measurement, bit on responsible investment, talk a bit about green finance, and then we'll talk about the three core lines of our business, Lendlease being a integrated real estate property company. So we have a construction business, a development business, and an asset and investment management business. Okay. So first of all, some of you on attending this may be aware of Lendlease. So we're a large global integrated real estate and development company. So we've got a $130 billion pipeline, and that's largely focused on large urban redevelopment or mixed-use urban regeneration projects. We also have a large construction backlog, funds under management. So from a sustainability perspective, we actually find land. We also work with institutional investors like pension super funds, sovereign wealth funds and so forth. And we find the land, we master plan large sustainable urban regeneration projects, and then we construct those, and then we create assets out of those, of which we have some portion of typical ongoing investment stake, but also with investors, and then we manage those assets. So fundamentally, you know, the places we create are actually going to exist for quite some time. So we do have a long-term invested interest in the viability, sustainability, and resilience of those assets, okay? So look, you know, to take a step back, our future, it's probably worthwhile thinking about by 2050, 70% of the world's population will live in cities. Now at the moment, sitting around about 58%, this is according to the UN, and 60% of all new urban settlements are yet to be built. So when we look around our cities, if you think of 60% of urban developments yet to be built, so you can start seeing that the places that we are going to start financing today and creating and developing are going to be the ultimate future legacy that we're going to create, okay? So what we create today will still be here in 2080. So this is where we need to fundamentally as an organization start taking a really long-term view on things. You know, this is not just about what the profit is in 1 or 2 years, but if you're going to take a long-term investment stake, then how is this asset going to perform in a world, you know, with a climate change future, and the way we change as a society as a result. So let's take a step back. The built environment, most of you know, 27 to 30% of the world's global emissions are associated with a built environment. And if we look at our own core business down this left-hand side, you can see that if we look at scope 1, 2, and 3 emissions, by far the biggest emissions there are the materials we use. But then we've also got to consider our tenant emissions. And in our scope 1 emissions, obviously it's the fuels that we use when we're constructing buildings, or gas we use for maybe cooking in buildings or heating and cooling. The scope 2 is obviously the electricity consumed in operating our businesses and in those assets. And then scope 3, as I mentioned, with 2 key elements, which are the embodied or upstream elements, such as embodied materials in the construction materials we use, and also the energy associated with the tenants in our facilities. Okay, so when you really look at that at a large spectrum, there is quite a huge area of influence and a lot of areas to sort of challenge yourself on as an organization. And it's critical to think about where you need to focus as an organization, because we all have limited resources and we have limited people. But I think it's worthwhile not only looking at that environmental factor, but also we need to consider there's some other things that a lot of organizations, on this call would be also thinking, well, yes, there's a global carbon target, but there is other real aspects of how is extreme weather going to affect your asset portfolio or where you develop, how is that place going to function if the average heat days in a year goes from 30 to 45? How it's going to function if you get a 15% increase in heavy rainfall, or if your 1 in 50 year flood becomes your 1 in 25 year flood. So all these parameters can very quickly affect the business viability and how your asset operates. Secondly, as Carla was talking about, regulatory compliance. It is there, it is happening, and I often have a discussion with senior leaders going, what today is considered leadership, tomorrow quite quickly can become a compliance driver. Okay, so what we see as leadership today in a few years may actually be a minimum requirement with regards to compliance, whether that be carbon pricing, whether that be disclosure, mandatory disclosure of energy performance in buildings, whether that be mandatory disclosure of energy and carbon at an organisation level on a stock exchange or so forth. There are a number of these compliance factors starting to come in. Clients and partners, if you like Lendlease, you will deal with large cities and leaders and governments in large cities all across the world, including Malaysia, so you need to think about, well, what are their commitments as a city, and as a country, where are they going to get to, and is an investment or an asset you're creating going to be aligned to that target, or is it actually going to help you achieve that, help them achieve that target? Obviously your investors and insurers, what we're seeing is that, as a listed organization, we are starting to see investors and insurers really start to ask for not just, are you reporting your sustainability performance, but they are going that next layer down in depth to go, well, that's good, you've given us this high level qualitative remarks about climate risk and sustainability, but now we actually want to see how you're actually pricing carbon risk in when you're valuing your particular assets and operations or your supply chain. Industry benchmarking, a lot of us on the call will be familiar with green buildings. 10, 15 years ago, a number of these green building targets were considered, real leadership positions, and now you're seeing green building expectations around green building ratings actually become a minimum compliance. You're expected to get a top tier green building rating and then go beyond it with other aspects of what the asset you're creating. So these benchmarks and also the TCFD there, or the Task Force for Climate Related Financial Disclosure, it's coming out of the financial markets, as well as GRESB, as well as GRI, and a number of other 3-letter acronym organizations or 4-letter acronym organizations. These are starting to really permeate and give a more material structure to the way you report. And finally, it was mentioned before on the call before, is how it's starting to affect supply chain and resources. Are the supply chain products and materials that you're relying on going to either be immediately or in future be impacted by aspects of carbon, whether that be pricing, whether that be supply or constraint, whether that be taxes, or whether that be limited sources versus renewable sources. Okay, so there's a number of drivers, and all these drivers obviously affect leadership, executive leadership teams in organizations and boards and management teams when they start seeing all this, and it's no longer just a pure, oh, look, I need to do this to meet a Paris Agreement. There are actual genuine business drivers here. So quickly, first things first, I'm going to use Lendlease as a bit of an example, but this is not about, not really about telling organisations to do exactly what we've done. It's more about sharing some ideas on how we may approach this so that sustainability becomes very aligned to your financial performance of an organisation. It becomes aligned to your strategy and your decision making. So first of all, at Lendlease, we've applied, we've set targets like a lot of organisations. Ours is to be net zero carbon in all our construction, all our asset management, and all our developments that we have an investment stake in, own, operate. Across the world, scope 1, 2 by 2025. That's scope 1, 2, and by 2040 we're aiming to be absolute zero. So that includes scope 3 emissions. So that means zero carbon concrete, zero carbon steel. So there are a lot of very ambitious things in that 2040 target, and by no means do we have all the answers. In fact, we've got very few of the answers, and this is the journey that I think a lot of organisations are going on. But it's about, setting the market and going, well, this is where we're going to go, and this is, we want our supply chain and our competitors and our partners and our investors and our clients to come along the journey with us, because if we all do, then it actually does shift the market. So that's a little bit about, so it's critical that you do set targets, and they've got to be relevant to your organisation. Secondly, it's one thing to have targets, but you really do need to take a step back from your targets and think about the fundamental governance behind those targets. Because it's one thing to set a fantastic target with a leadership and everyone's really excited, and you can put out some great communications in the market, but fundamentally those targets are going to go nowhere unless you really drive down the governance in an organisation. I heard before mentions of of risk and compliance functions, insurance functions, finance teams, legal, business strategy, IT. You really need to fundamentally do that. So in our organisation, those scenarios you see across the background, we've made those publicly available. That's essentially Lendlease modelling 4 different climate scenarios and seeing how our business might respond as an organisation under those. So for a leadership team, you might be thinking 5 years, might be thinking 1 year or 5 years, how's the business going to perform and what its profit's going to be. But when you start getting all elements of your business starting to have genuine workshops around what will the business look like in 50 years, 60 years, 70 years under these different climate scenarios associated with 1.5 degrees, 2 degrees, 3 degrees, 4 degrees, it's rare in an organisation do you actually really think that far ahead, and you do fundamentally come back to what's the purpose of the organisation and how will it survive, and where's its relevance, and what are the how is it investing its money, and what are the places it's creating. So for Lendlease, we worked through these climate scenarios. We did sign up to TCFD. As an organisation, I do recommend looking at that genuinely, because I think it's been something that's been quite powerful to bring non-sustainability fraternity in large organisations along the journey. It's something that's really resonated with board, executive leadership, legal teams, finance teams, because it really brings the rigour around not having a sustainability strategy and a business strategy, but actually having those integrated. Other things to think about in there, we looked at climate change scenarios. We do undertake, which I'll talk a little bit more about, we actually do undertake detailed climate risk assessments of every new bid, every new project we look at, which requires a bit of work. We put a price on carbon, so we undertake a commercial financial assessment on all projects now where we're pricing carbon into projects, whether that be in scope 1 or scope 2 and scope 3. And not only are we pricing those in terms of how will that asset operate, but we obviously are pricing that in to see how will that impact the commercials and the fundamentals of that business investment decision. Okay, and you can see down the bottom there that that's our, we've got a shadow price on carbon at Lendlease, so that is $20 a tonne in 2020, which scales up to $100 a tonne by 2030, and then scales up to $140 a tonne by 2040. So these things do start, when you start seeing these numbers in investment papers, you really start to see this. Quickly, another thing to think about as an organisation is to measure and model your actual business, not only what has been, and this is obvious, this is a subset of our data in our business, but to look at how the business has performed, and then you can start modelling either future investment decisions or actually your future pipeline. But basing your investment decisions and your future strategy and trajectory on real data is fundamentally critical, okay? And I am moving fast on this. 4, responsible investment filters. This is just a snapshot of the way we're doing it. We obviously have a holistic sustainability strategy that looks at things like biodiversity, social impact, carbon, climate, the broader gamut of all of these things. But not only in every investment paper, these things come, and behind this, there is quite a layer of information. But fundamentally, it sets your business up for success. It is no good having a strategy over here and investment decisions are made without a consistent approach to assessing sustainability, climate, social risk, and how you're adopting those. And it really does ensure that every new thing you embark on, you actually take a consistent approach, and it doesn't contradict your strategy and actually supports you achieving your strategy. Okay. Sustainable finance. So, you know, it's for our organization, it's really, you know, it's something we've been looking at for quite some time as an organization, but in the last 12 months, we've raised $800 million in green bonds as an organization, and we invest that money solely into high performance green buildings that have very clear sustainability commitments in the portfolio globally. And that's how we're working through that. And Lendlease continues to see that why, you know, if you are going to embark on a genuine sustainability journey with your organization and you are assessing climate risk and social impact in your organization and looking at financial proxies on social impact, then why wouldn't you do your best to align your finance to actually support that strategy? And that's why I think, you know, 2 key things there is certainly not only explore these things, but really look to your finance teams and your treasury departments and your risk teams to help them to get a good understanding of what's out there, because it's such an emerging market. And I guess the attraction of sustainable financing options has actually shifted quite materially, where there is economic alignment as well as the sustainability alignment of these. Now in our business, I'll quickly talk about our 3 businesses. In construction, as I mentioned before, you know, key things to take away. If we looked at our own business and our own portfolio and we looked at our scope 1 emissions, 90% of our scope 1 emissions or thereabouts comes from our construction business. So that's fuels in the construction of buildings and developments and sites. So how are we tackling this? Well, like any organization, you look to seek to, you know, we're looking at firstly reducing fuels through design for manufactured digital twins, assemblies. Then we're moving into energy transition solutions like biofuels, biodiesels, renewable diesels. Then when we can't do that, we're actually seeking to really push electrification of the industry. And this is where we really want other industry players to come on board and supply chain to really look at how we electrify construction. Because if you can electrify construction, you eliminate scope 1 emissions, and then you purchase green energy for that construction, then you're getting close to a carbon neutral for scope 1 and 2 for your construction. Then we start looking at purchasing green energy, and then carbon offsets always for us is as a last option. I am conscious of time. When you start delving into scope 3, as I mentioned before, we have a 2040 target to get to absolute zero in scope 3. Materials are very challenging and it's a journey, but I'm a firm believer that if organisations do start to ask for these things in their tenders and they do start setting these criteria, the market will respond and will start looking at pricing these products in, and this is where we need to get to. So as a soundbite for the audience, you know, in a typical commercial building, almost half the embodied energy in a commercial building is associated with concrete, steel and facade, as I've noted there. So, you know, this example, this is a little case study we did, and you can see up the top right-hand side, there's concrete, reinforcing and steel, but then you can see all the other elements. This development here on the bottom right is Barangaroo on Sydney Harbour, number of large commercial buildings. So we took to a number of these different initiatives to try and reduce carbon in the materials. And it was a very big journey, and we're now doing this elsewhere in the world. And where we essentially got to was here, we managed to reduce the embodied energy in those 3 towers by about 21%. But it was a very big journey, and that was done 2 years ago. So now the lessons we've probably learned are, don't try for as many materials to begin with, but make deep inroads into a couple of your really big materials first to get that momentum. Only a couple of slides to go. As I was mentioning before, make sure, you know, undertaking robust climate resilience assessments of your future investments is critical, and it's not just the physical risk. So by physical risk, you can see up the top left there, river flood, urban flood, sea level rise, so forth. There's some brilliant sources of publicly available information out there if your organisation can't afford to get some of the detailed modelling packages out there. Organisations like Swiss RE have a fantastic publicly available database which does look at flood trends on various locations connected to geographic information systems. And we've gone out and we've looked at a more proprietary system, as well as using other publicly available information to actually do a preliminary screening ourselves on different climate risks. So as well as looking at the financial risk and the carbon implications, and how does that impact our targets and the actual cost and the commercial assessment, we also look at the physical aspects right the way out to 2100. Okay, so, but I think this is a real learning curve for organisations, but I really do think that there's some huge amount of value in organisations starting to build their own capacity to look at this, because it can materially affect where you invest and how you invest and how you design these the assets you do create. Applying that on a much more macro level, this is an example of a recent project we've done in TRX, and here's a number of these climate resilience aspects we brought into design and operation. And this is all publicly available on the exchange website, so feel free to go on there and have a look and actually look at some of the things we've had to look at. And I'm getting prompted to move. I think I've got one more slide just to hopefully, and in asset management portfolio, you know, it is a broad breadth of things. It's not only just designing a green asset, but it is looking at genuine green leases, sustainability action plans for assets, renewable energy mixes. And look, I thought I'd share this with you. This is an example of how you might structure your investments in an asset and shift those with regards to your return on investment, or your IRR, with regards to the carbon impact as well as the efficiency. So this is how you start talking the language between qualitative sustainability outputs and financial decisions in investment making. And I think some of this stuff is really key to get the decision makers, the general managers, the operations on board. And finally, I think they're the things I'd probably summarize with, you know, to get real traction in an organization with this is, one, align your business strategy, your enterprise risk and climate scenarios, particularly with your core functions like finance and treasury and your investment decision making. Really learn to utilize the data. It's amazing what you can learn from your own organizational data if you actually do take the time, not just collect it, but actually look at it. And make sure you transform that into things that your business can act on. And finally, as you see, I've gone through a lot of technical stuff here. Certainly invest in the capability of your business. Don't expect people who are from top leadership to operations to understand all this. You need to make sure that you build that technical capability and understanding that helps your organization succeed. Thank you.
Thank you, Michael, for an insightful presentation. We had one question about the balance between infringing personal lifestyle and a company's sustainability efforts, but I think it has been clearly answered in the discussion about scope 1, 2, and 3 emissions. Obviously, corporate emissions from operations far outweighs individual emissions, so we might want to focus on those first. There is a lot a company can do in managing their carbon footprint, thinking about fuel consumption, energy use, and others. And this you will find is in line with the net zero scope 1, 2, and 3 carbon emissions framework. Moving on, we will hear from Fredrik Andersen about sustainability in procurement. Fredrik is the Corporations and Supply Chains lead from CDP. He leads the corporate engagement team at CDP's regional office in Hong Kong, where they work closely with companies in Southeast Asia and Oceania to facilitate environmental disclosure and support environmental action within their direct operations and supply chains. Fredrik, you may start your presentation. Thank you.
Thank you, Elena. Can you hear me okay?
Yes, it sounds good. Thanks.
Great. Yeah, thank you very much for having me, and thanks to Michael for a very interesting presentation. It's really really insightful to see the holistic approach that you take at Lendlease and the ambitious targets that you set. So many of the things that I will touch on today are mentioned by Michael in the previous part. So I'll do my best not to overlap. But so as Elena said, my name is Fred. I'm from CDP, and I'm based in our Hong Kong office, where we work with companies throughout Southeast Asia and also Australia and New Zealand. And today I'll share a bit of information on procurement's role in corporate sustainability. So in the next 10 to 15 minutes, there's a couple of things I'll touch on. First, a little bit about my organization CDP and how we work with supply chains. Then I'll talk a bit about why assessing environmental sustainability in your supply chain is important. If I start breaking up, I'm getting a message from WebEx that my bandwidth is low, so just let me know if that's the case. I can turn my camera off. So after I talk a bit about why assessing environmental sustainability in supply chains is important, I'll share some examples of current global best practice, which I think Lendlease had some really good examples of. So to provide some context, I would like to just start off by sharing some brief background on CDP if you're not familiar with us. So CDP is a platform and a framework for companies to report environmental data and to disclose on their environmental performance. Every year for the last nearly 20 years now, we have reached out to companies on behalf of our investor signatories, who now represent around 600 institutional investors worldwide who would like to better understand the environmental performance of listed companies for their investment decision making. So CDP collects data on corporate environmental performance, and we do this in alignment with the TCFD recommendations. And we also collect data on deforestation and on water security. In addition to our investor signatories, we also reach out to suppliers on behalf of large purchasing organizations who wants to engage or better understand the environmental risks, impacts, and performance within their supply chains. So on behalf of these stakeholders, we reach out to the companies to collect environmental data through our online questionnaire and platform. And some of the benefits of this, we'll talk a bit more about in a few slides, but obviously one of the benefits for our data users is that they can access the data from a centralized location, and importantly, in a standardized and comparable manners. And submissions to CDP are also scored to allow better benchmarking. And we also continuously update our questionnaire to ensure that it is aligned with latest best practice. And as Michael said, corporate environmental management is a fast-moving space, and the bar keeps shifting. Since today's topic is on procurement, I will share more about how we work in supply chains. As I mentioned on the previous slide, we work closely with the procurers. So this year we work with about 200 large purchasing organizations to collect environmental data from their upstream supply chain. So then mainly in the scope 3 category of purchased goods and services. Traditionally, the focus on the company's environmental performance has been around their direct operations, but we are seeing this focus widening more and more to now also cover a company's scope 3 or their supply chain. In the past 5-10 years, especially at CDP, we have seen a lot of momentum in this space, and it doesn't seem to be slowing down anytime soon. So, for example, the 200 procurers that we work with this year represent about a 25% increase just from last year. So CDP works with the procurers to identify which suppliers to engage, and then we work with those suppliers to collect environmental data on behalf of the customer before assessing it and providing it back to the requesting customer in various formats and reports. See here. And so, yeah, just to give you an example here of some of the purchasing organizations that we work with, you can see there's a lot of big names. So, you know, kind of indicating how supply chain engagement is really becoming mainstream. So I'm sure you recognize many of the companies here. Collectively, these companies represent over 5 billion US in procurement spend. And closer to our region, you may recognize companies such as Samsung in Korea, Western Digital in Thailand, and we also have several members in China, Japan, and Australia as well. And then finally, I want to illustrate the momentum that I mentioned. The graph shows how many companies disclosed environmental data through CDP's platform between 2003 and 2020. As you can see, the momentum has only been growing, and last year nearly 10,000 companies submitted data. And this was despite the challenges brought on by COVID-19 and temporary or even permanent closure of many businesses. And the fact that we saw such a growing momentum despite the challenges brought on by COVID, it really highlights how corporate environmental efforts are no longer a nice to have or a marketing tool, but more a fundamental component of a business operations. So if you're being requested by your customers or other stakeholders to work with them on environmental initiatives, I would really recommend that you explore and pursue options like that. If nothing else, not to fall behind the curve, but there is also many opportunities with supply chain work. So why have we seen this growing focus on environmental action in supply chains in recent years? There are several reasons for it. And again, I think Michael touched on some of the key ones in the previous presentation. One of the key reasons is for most companies, their largest environmental impact lies within their supply chain. Last year, CDP research found that Scope 3 emissions or indirect emissions from your supply chain are on average 11 times higher than that of your direct operations. So if we are to be able to meet the goals of the Paris Agreement and transition to a low carbon economy, supply chains will play a crucial role in achieving this. With the explicit goals of the Paris Agreement, the subsequent NDCs and so forth, more and more companies are aligning, like Lendlease has, their long-term business strategy to transition to a low-carbon global economy. And a key way to achieve this is by establishing emissions reduction targets that puts the company on a trajectory that aligns with the goals of the Paris Agreement. These types of emissions reduction targets we call science-based targets, and we have seen a significant growth in companies setting such targets in recent years. Importantly, these types of ambitious targets usually includes a Scope 3 component as well. And it is therefore necessary for these companies to also have low carbon supply chains to realize their own ambitions. This is one of the key reasons and motivations for some companies to start working with their suppliers on environmental issues. By collecting environmental data, they do not only track progress towards their own targets, but it also serves an opportunity for the company to communicate their environmental efforts, to set the expectations, to identify low-hanging fruits and room for improvement, ensure that suppliers are on the same page and hopefully on the same trajectory, and to build that momentum for carbon reductions in their supply chains. And as I will show in a few slides, supply chain engagement does indeed lead to results. And beyond, of course, supporting your own environmental efforts, the supply chain engagement can also help in other areas. So again, as discussed earlier, risk management is a key thing now. So with the TCFD recommendations, or the Task Force for Climate-Related Financial Disclosures, we've seen a huge focus on climate-related risks, and to have a comprehensive risk assessment, of course, also looking at your value chains is essential. When it comes to engaging suppliers, CDP have an informed strategy and an approach with the aim of improving supplier performance and to drive action. So you can see the 3 phases of that strategy that we often recommend or that we follow on the screen. The first phase is to really establish a foundation. It's to identify your strategic suppliers based on your objectives. And then it's working on engaging them, encouraging disclosure, and collecting the data needed. This will give you a baseline to start working on. Then on phase 2, building capacity. Here we often look at expanding the pool of suppliers that you work with, and to start introducing KPIs and targets for suppliers to use as goalposts and to work towards. And here you can also start thinking about integrating sustainability metrics into your procurement processes. And then the final phase is, once things are established and starts rolling, is to track these emissions and to improve year on year performance. And then you can also start, building up the quality of your data and having then primary data of your in your scope 3. And as I mentioned a few slides back, supply chain engagement does lead to results. On the screen, you can see some findings from CDP data where we looked at several thousand suppliers who disclose environmental data to their customers on an annual basis. So on the top there, you can see how many of the suppliers had emissions reduction initiatives in place. When we saw a supplier being requested for the first time, on average, 38% of suppliers would have such initiatives in place. But once they'd been going through this reporting exercise for a couple of years, in the 3rd year, we see this average increase to 69%. Similarly, if we look at suppliers who have company-wide targets and goals for minimizing their environmental impacts, in the 1st year, on average, we saw 50% of suppliers having such targets and goals. And again, in the 3rd year, this had increased to 66%. I'm going to skip this slide. And of course, ultimately, absolute emissions reductions is what we really want to see as the outcome of environmental efforts. But it is, of course, easier said than done. And I think, Michael also covered this very well. The importance of, just having an emissions reduction targets in itself. If you're starting from scratch, this may be very challenging, not only to get the buy-in internally, but to have the support company-wide from different business units and from different levels, so that you can establish realistic emissions reduction targets and goals. So over time, it's therefore very important to have an holistic approach to incorporate environmental efforts through your organizations. And on the slide, I've included some of the elements that CDP currently considers best practice in this regard. Again, as was talked about, the importance of having strong governance. So not only having board level oversight of climate related issues, but also having strong management level input and mechanisms in place to really implement the targets and the objectives and the visions of the board. Risks and opportunities, I won't talk too much about this, but of course, risk management processes plays a crucial role in environmental management today. And again, especially with the advent of things such as the TCFD putting a big emphasis on climate-related risks. And we have physical risks, which we are seeing more and more of, and particularly in our region, disrupted supply chains from extreme weather events, but also in the longer term transition risks from stricter regulatory environment and so forth. On the strategic level as well, once having the governance from the board and the management level, again, as Michael touched on, having forward-looking assessments of climate-related issues. There are tools in place now that are becoming more and more popular, such as climate-related scenario analysis that can help companies establishing transition plans to put their company on a trajectory that aligns with the goals of the Paris Agreement. On the target side, again, we are looking at best practice. We consider companies who have science-based targets, which we talked about earlier, targets that align with the goals of the Paris Agreement of limiting global warming well below 2 degrees, but ideally to 1.5 degrees Celsius as compared to pre-industrial levels. And finally, also just to add in verification of your emissions data for transparency, credibility, and quality assurance. We also consider it very important for companies who are starting to establish their environmental reporting to have such verification in place. And as I've talked about today, supply chain engagement. Once you have your direct operations, you have your targets and goals. For most industries, there is also a big need to look at your scope 3 emissions, where most likely the majority of your emissions will lie, and this will be crucial to meet again the goals of the Paris Agreement. So that's a very high-level intro to some of the the role of procurement, I suppose, in sustainability. I'd like to end it off today to give a brief case study. So Dell Inc., the computer company that most of you probably know, is one of the companies that CDP works with to engage and collect data from their suppliers. So you can see on the left-hand side some of their guidelines for their suppliers. So they want their suppliers to report at least on their scope 1 and scope 2 emissions. And beyond that, another key guideline that they have is that they want their suppliers to have public goals to reduce their greenhouse gas emissions. And as you can see on the right-hand side there, to meet these requirements can impact the suppliers' ranking and diminish their ability to compete for Dell's business. So looking at your supply chains and scope 3 environmental action, it doesn't only make more and more business sense, but it's key in global environmental efforts. That's the last slide. Yeah, I had. I don't know if we have any time left, but happy to take any questions if there are. And yeah, thank you for listening and again for inviting me today. So Elena, should I hand it back over to you?
Hi, Fred. Actually, we just want to help address one question, and it's related to the case study that you put out. So I just wanted to ask you from the audience, for financial institutions, biggest suppliers are IT-related suppliers who may or may not have material environmental impact. Can you tell us a bit more about that?
Yeah, it's for financial institution, it's been a challenge to really define the scope 3 components, and this is something that it's being worked on. I think there is a lot more resources out there now, but there are methodologies available in the public space as to how financial institutions can go about evaluating their scope 3 and emissions from their own value chain. And I'm happy to, I don't have too much insight on it right here, but I would be happy to find some of those resources that we can share with the follow-up materials.
Thank you. That's all the time we have for now. Thank you so much, Fredrik.
Thank you.
We will now take a short break before moving on to the next topics, sustainability in human resources and marketing, branding, and communications. Please rejoin us at 3:45 p.m. Welcome back. In the next session, we will explore sustainability in human resources. and we have an esteemed speaker who will be talking us through this topic. Karlijn van den Berg is the transformation lead for ABN Amro. Karlijn has broad experience within ABN Amro Bank NV, including sales, sales management, marketing and products, as well as strategy, business development, and change management. She is passionate about organizational and leadership transformation. I'd like to invite Karlijn to take the virtual stage and share with us ABN AMRO's journey towards becoming a purpose-led and values-driven company. Over to you.
Thank you so much, Elena, for this introduction, and really great to be here. Indeed, my name is Karlijn van den Berg. I work at ABN AMRO, an Amsterdam-based, originally Dutch bank that you might know because of our global presence. And it's really great to be here and to be able to share a little bit of our story on how we embark on becoming indeed a purpose-led and values-driven organization. So I think you've already heard a lot about why this is really an important topic, and also about a lot of the different components and angles to this. Listening also to the previous speaker, I really liked the comment about it's a trajectory, it's a journey, and I would like to share a little bit of our journey here today. So before we go into it, I'd like to share a video. So if that could be started, that would be great. So this is how we kicked off our strategy, accelerating the sustainability shift in 2018. And maybe it's because I work at ABN AMRO, but I still get goosebumps when I watch this video, because to me, it really shows not only the big challenges that we have as a world and as a global community, but also the opportunities that come with it. So let me tell you a bit on how we embarked on this journey, and I'll do it in two parts. So one more about the transformation and our beliefs and views on how to embark on such a transformation. And in the second part, I'll go into HR practices and the role that HR can play. Yes. So coming out of the financial crisis, and we were also becoming state-owned in that process. After that, an IPO, we had a long and hard dialogue within the organization about our essence of who we are and also who we want to be. And in that process, we really had a lot of conversations with the board about what is the position of a bank and what should it be. And this happened all around 2017. And we kind of agreed that you need a higher purpose to be able to stay relevant in the longer run. And that's why we agreed that as an ambition, so not going into the what's and the hows yet, but to really spend quite some time on understanding why ABN AMRO is ABN AMRO and what is the role that we can and should play. So we committed to embark on a journey to become a purpose-led and a values-driven company, where the purpose really established the higher ambition of the organization. And after many conversations within the bank, also going back to our roots, to our origins, we crafted out the purpose, which we call Banking for Better for Generations to Come, which is obviously a very broad statement, but it's very closely linked to sustainability and the climate change aspects of that. And on the other hand, we linked it to values. So what are the values that are at the core of the organization that also people can connect to, and from those values can contribute on a personal and on a team and on an organizational level to the journey we embarked upon. And we believe that if you focus on becoming purpose-led and values-driven, you are so connected to the world around you that that will ensure that you are and stay relevant also for the future. So zooming in to our purpose and our strategy and our culture, which we have defined as you normally do with strategy, you have a catchy phrase and pillars beneath it. We have defined our values, but obviously the magic is in how to bring it to life. And I think for us, there are two components and also a lot of lessons around how you work on this, is that we really focus on leadership and the leaders of the organization leading this transformation. And where we feel the essence of the role of leadership is to connect the dots between what you set out in your purpose is your higher ambition, how you translate that into strategic priorities and targets and goals that need to be very specific to give guidance to the organization. And on the other hand, how you build the culture and build also on the culture that you have that supports delivering on that purpose and that strategy. And working on that leadership is setting the stage or creating the environment for people to become engaged, to become a part of this journey and to contribute everything that they have. So one of the views that we have is that organizations do not change, people make change happen. So if you have a purpose and a strategy and a culture that engages people, that they want to bring out the best that they have and contribute to society, then you will unleash an amazing potential in the organization. And that's I've experienced that. I've been with ABN AMRO for more than 20 years. And what I've seen happening in the organization, having a purpose that is so connected to the world and also to societal problems that we have with climate change and all different kinds of societal problems that we face, and thinking about how as a financial institution you can and should contribute to that, unleashes a whole new world of engagement and also opportunity. After unleashing or building the engagement and setting the scene for the change and being clear on your direction, it's obviously also very important to become specific, because otherwise it's really nice and you have engaged the hearts of people, but we also need to be able to act on it, and for that we need to become more concrete. And the good news is obviously that a lot of bright minds have already defined what it is that we need to do as a world, as a global community, which is set out in the Sustainable Development Goals. So there's a wealth of information, targets, analysis done on where you can contribute. So we've looked into that and selected 3 areas within the Sustainable Development Goals that we feel are very close to who we are and where we can contribute. So we have initiatives and targets around climate change, about promoting and facilitating the circular economy, and around creating social impact. And once you have established a clear why and what, and also established who you want to be, then obviously you can also become more specific in interventions that you can deliver as an HR organization. So before I go into that, I would like to ask 2 questions in the poll, if that's possible. About the role of HR, how you experience it now, and what you think it should be. So the first question is, what do you think the role of HR should be in bringing sustainability into the heart of the financial service sector? And there are 4 categories. So should HR be a service provider, a functional expert, a transformation enabler, or even at a higher level, a strategic transformation partner? It'd be great if you okay. Let me see if I can go down. Great. So I think, well, it's about 50-50, but it's definitely on the top end of the role. So transformation enabler or strategic transformation partner, which sets the bar high, I think, in terms of expectations. So maybe to the next one, where do you see HR currently playing the role? So in your own organization, or maybe if you're a consultant, more in the areas around you. Where is HR at this moment in time, in your view? And again, on the same 4 categories. There we go. Okay. So this is a mirror for HR professionals to up the game, because the outcome is about 35% sees HR currently acting as a service provider, and 21% as a functional expert, and only 18% as transformation enabler, and 7% as strategic transformation partner. So that kind of sets the stage for HR for sure. But maybe then a few words on what we've done and what we are trying to do, and also still learning to become better at. I think in that we are somewhere between functional expert and transformation enabler in ABN AMRO. I think we've come a long way in the last few years, but definitely there is a whole world to gain there. So within ABN AMRO, in the HR discipline, we focus on 2 aspects: on the leadership development and embedding sustainability in our employee journey. So we've defined the different phases of the employee journey, and really offer different interventions in those phases to embed sustainability, and on very many different levels. So the Leading for Better, you see on the top, is a leadership program where we really make the infinity sign that you saw, linking purpose, strategy, and culture together, is what we train our leadership in our Leading for Better program. On the bottom, you see creating a sustainable movement. We have created a specific training platform called Circle Academy, where we offer a lot of training. And I think one of the previous speakers also mentioned that there's lots of knowledge to be gained. So you also need to facilitate the learning experience to be able for advisors to incorporate sustainability in their work as a financial advisor in whatever sector they work. Then we have in our collective labor agreement, we have opportunities for people to invest in themselves and in society with our Banking for Better Days. It's a way we've introduced, allowing people to really contribute to society in a structural way. But also in the area of diversity, there's a world to gain. So we have also invested in really implementing in our recruitment process processes, practices, and also KPIs on how to make sure that we are an inclusive organization that attracts and retains the talent that we need also to deliver on this journey. Looking also at the time, maybe one last thing. So there's much more to share there. I think there are many examples. So I think the good news is for HR professionals that once you can definitely contribute to setting the stage and the scene, but that should be a collaboration between strategy, HR, communications, and obviously the business. And then there's a lot that you can do and embark and facilitate, guide, push on this journey, which is really about the hearts and the minds of the people. And we are still learning to become better and more deeply embedding our sustainability ambitions in the way we do our business and we organize ourselves and we facilitate the people that work with us. So I think to allow for Q&A, I think I need to stop talking and see if there are any questions that we need to that we want to address.
Hi, Karlijn. Thank you so much for that. We do have one question that is asking us, what do you think about linking remuneration to ESG targets and what are the challenges associated with that?
Yeah. So yeah, that's a very good question and a difficult one. So I think it's important if you're serious about embedding sustainability in your organization, it should be reflected in your KPIs, no doubt about it. So in ABN AMRO, it is part of the total KPI set, which has a link to remuneration. So for us, it is the case that performance against your KPIs does have an impact on remuneration, only for a small part of the company actually, because we kind of decoupled financial incentives from target setting, which is a whole different topic about performance management so I think you need to be careful, but I do think you need to embed KPIs and targets in your performance management approach and system.
Thank you. Another question is, what is ABN AMRO 50-50 target about?
Yeah. Yes. So the 50-50 target is that to progress on our ambitions to have more gender equality in our company. We have analyzed that we have equal opportunity once you're in the company, but the inflow is skewed. So we have more male colleagues flowing into the organization than female. So we've now agreed that we actually have set targets that we want a 50-50% inflow of new talent coming into the organization to make sure that we end up with an equal distribution of gender across the organization in the long run. It's also a long-term investment, but it's definitely making a difference, especially in areas where there are still many more males than females working in our company. That's
interesting. Does that have any impact on sustainability goals or target setting when you have a balanced gender distribution in the firm?
Yeah, so we think it does. It's obviously more indirect, but that's more coming from that we firmly believe, and that obviously goes way beyond gender. That a very diversified and inclusive organization will make you more connected to the outside world because you have all the views of the society that you operate in your company. So I think you have much more feeling for and sensitivity to the issues that you need to address or that you can work on. So with more different views, so it's more about diversity of thought, which is represented by diversity of genders, culture, sexual orientation, what have you. That will lead to more diversity of thought, which will help come up also with creative new ideas and innovation. There's obviously a lot of research about that. So in that sense, to us, it's very clearly linked also to our sustainability ambitions.
Thank you so much for your time, Karlijn. That's all we have time for.
Yeah,
Karlijn. Thank you
we
so
can talk
much.
about this for hours. Unfortunately, it's only 20
Exactly.
minutes. So wishing you a very lovely continuance of the conference, and thank you for having me.
Thank you for sharing your knowledge with us. Obviously, human resource and human capital are at the heart of every organization, and ensuring that employees have the tools and training needed to think and act more sustainably is crucial. It's something we need to pay more attention to ensure a sustainable future for all. We have now reached the second final session for the day, and we will be discussing sustainability and climate change in branding, marketing, and communications of a company. Please let me introduce you to our speaker, Juan Arenals, CEO of Nestlé Malaysia, Singapore, and Brunei. A Spaniard, Juan Arenals joined Nestlé in 1990 and brings over 28 years of experience to the business globally in the Nestlé Group from his key roles across a number of different markets in Europe, Latin America, and the global headquarters in Switzerland. He will now share how Nestlé is using its business as a force for good. Juan, over to you.
Thank you. I think, Eugene, you will help me with the slides. So firstly, what I will try to do in this session is basically bring you from the sky of corporate commitments into the ground realities of the brands and consumers. Maybe if we can go to the next slide, just a few words. I will talk specifically on what we are doing here in Malaysia. As you know, we are probably the largest fast-moving consumer goods in the country. We are also a public listed company. We have a very strong and relevant industrial footprint, and we dedicate a significant part of our capacity to exports. So clearly, we are very mindful of the impact that our operations can have in the environment, in the same way that we have that awareness in every part of the world where we operate. On the next slide, please. These are some of our global commitments. Clearly, Nestlé has made very, very aggressive commitments to achieve basically zero net carbon emissions by 2050, but you will say that's very far away. That's right. That's why we are aiming to reduce in half our greenhouse gas emissions by 2030. And we also, when we think packaging and packaging waste in particular, we have the vision that none of our plastics will end up in landfill or as litter. Again, completely aggressive timelines have been defined. All our packaging has to be 100% recyclable or reusable by 2025. And even more concretely, we want to reduce the use of virgin plastic by 1/3 by 2025. And that's, believe me, it's a lot of work. So we need to mobilize and take action very, very fast. When it comes to the brands, next slide, please. We need, well, first, let me just mention that here in Malaysia, we have 3 main focus areas, which are fully aligned with the priorities of the group globally. So we want to tackle aggressively all the topic of plastic waste. We are playing a role in reforestation, and I will refer to a very beautiful and quite ambitious project that we are driving over the next 3 years. And we are also kind of taking steps to accelerate our transition into renewable energy. How this is lived by the brands is very, very important. Next slide, please. At the end of the day, brands reach consumers, and reach, in our case, millions of consumers every day. And if we can harness the power of our brands to drive behavioral change, that can have a very big impact. I will refer to some of the initiatives that we have implemented in the recent past. For instance, how we move from plastic straws into paper straws. How we are continue to work in driving local ingredients in our portfolio, no? Because the least raw materials have to travel, also the lesser the environmental impact. And then also how in packaging there are so many things that we can do. Also, please stay in the next slide, in the previous slide, just 1 second. For instance, the packaging has a certain size. If you can reduce the size and still preserve functionality, that can be many, many tons of plastic that you spare to the environment. And then what I believe firmly is the value of education and how brands that have an important reach to consumers and drive behaviors, drive message, and reach and engage on a very frequent basis can also be the spokespersons, the spoke brands behind making a change for better on the environment. I will share now some of these initiatives. Firstly, on my next slide, please. Thank you, Georgine. So we were first actually to abandon plastic straws, not only inside the Nestle group, but I would say across the industry. In September 2020, we completed the transformation. We moved over 200 million packs UHT of our products to sustainably sourced paper straws. That was quite an important transition, and we are very happy of how that transition happened and also how consumers embrace this change. I will share with you a short video that explains a little bit how this journey happened. So please. So that was just a very short video. We have Milo, as you see, those of you Malaysians know how relevant and present Milo has been over the last 70 years as part of the Malaysian landscape. And we want to use Milo a little bit as the brand that is the most active in spreading the voice of sustainability. So we launched recently this Milo Sayang Bumi platform, which basically tries to bring together in a very clear consumer-oriented language the initiatives that we want to drive. As an example, many of you are familiar with the Milo vans that are, going around the country and sharing Milo. And we are experimenting now with solar power vans. We have 2 of them already active, and many more will follow. We are also transitioning packaging. We're experimenting with paper packaging as an alternative to plastic. Obviously, in our warm climate, high humidity, that requires some challenge. That requires a bit of a careful transition, but so far, so good for the products that we have transitioned. And I will refer also to, I will not mention all the initiatives here, but I will mention the value of partnerships. We launched a few years back the Carton project conjointly with Tetra Pak, which is basically a first attempt at building circularity on packaging. So we have created a system to collect the used UHT packs, and basically we have in partnership with Tetra Pak, but also with our customers like 99 Speedmart. If you can go to the next slide, please, Georgine. So basically, we have created this infrastructure that allows to recover the packs that once they have been used, and through some processes, they can be turned, the different elements are separated, and we actually can turn them into roofing tiles that are used in some community to provide some basic shelter, basic infrastructure. And so far, we have collected over 100 million packs since we started this initiative in 2016. We actually collected 40 million in 2020, in spite of the limitations imposed by the lockdowns and the closing of the schools and everything that we are so familiar with. And the effort continues. And this year, again, in spite of the lockdown, we are aiming to have a very significant increase in the total number of packs collected. Again, a short video to illustrate what we are doing and also how we are trying to educate the public to participate. So simple. And, we focus also on children because, when kids adopt this behavior, you can be certain that when they get home and they see mom or dad or grandma throwing or littering, they will tell them something. No, we believe that really campaigns like this have a very powerful value on educating on these sustainability, responsible environmental sustainability behaviors. Not only is about doing these communication activities, it's also about building on our capacities and building partnerships to make also concrete change. This slide that you can see now is basically a quite pioneering initiative that we launched a few months back in partnership with the Anandarajah municipality. We organize collection and recycling on a voluntary basis for some communities in the city. We reached initially two neighborhoods in Anandarajah with around 8,000 households being covered. And we have seen how the people, Malaysians in particular, are very willing to be part of the change. Unfortunately, sometimes what happens is that you don't provide or you don't have the right infrastructure to make change happen in a way that is practical and simple for the people to embrace. This is a great example by providing this very basic collection capability on a regular basis. We have seen in the neighborhoods that we are reaching how around 75% of the households have joined the program. We are now expanding into other communities in PJ, so we will be reaching around 20,000 households by the end of July. And we see again that by doing change, by providing this capability, these basic infrastructures, we can really start collecting plastic and waste at the source and avoiding that it ends up as litter in the environment. Again, I think Malaysians are very willing to do their part for the environment. They just need to be guided and be given the basic infrastructure to make this possible. So this is a great initiative, and we are actually very thankful for the great partnership with the Anandarajah municipality. Another example, going to next slide, and talking about the local supply of ingredients. One of the biggest contributions to our carbon footprint actually is not our factories, it's not our trucks, it's actually the whole supply chain related to raw materials. The closer we can bring raw materials to the points of consumption, the better the practices in agriculture. And I will refer quickly to regeneration, because very soon we will realize sustainability probably is not ambitious enough. No, when we talk sustainability, we often talk about not making further damage to the environment. But more and more, the discussion has to be about regeneration, how we can go back in time and recover the soil, the water from the damage that has been done through the last few decades of uncontrolled development. There are many ways to do it. I will not go into detail, but I could mention, and I have my list here, from, tree intercropping to break the problems around having monocultivation of single crops, composting, over-adoption of plant-rich diets versus meat-based diets, forest conservation, etc., etc. And even when it comes to coffee, this combination of coffee with other plants that have a powerful impact in terms of carbon absorption. And Malaysia has a huge potential, for instance, when it comes to restoring mangroves. Mangroves are one of the most powerful form of forest mass to absorb CO2. Unfortunately, mangroves have been kind of losing space in Malaysia in favor, basically, of industrial development, and there is a big opportunity to restore mangroves and really use the full potential to absorb carbon in the environment. So Nescafé is going into this direction. So we have started to collect coffee, to grow coffee in Kedah, which is also a way of providing new forums, new livelihood for the rural communities in the country. So going into the next slide, and I'm mindful of time. So there is also a big effort to do in terms of providing greater clarity to consumers on how to recycle. Sometimes, you have some products, some packaging, but you are not very sure of where to put it. So we have developed, and that's adopted across all our brands, a very simple to use guide on how to properly separate the different components of the packaging and recycle them, put them in the right place so that they can be collected and recycled. So I think we have still a very short video that illustrates how this works. So Joji, if you could kindly. So again, it's about making it easy. I mean, consumers want to support the environment. We just need to make it easier for them. That's a very important role that the brands can play. And let me just conclude maybe with one initiative that we are particularly proud of. So, we from 2011 to 2020, we had this initiative called Project Relief that saw us planting around 1 million trees in Sabah along the margins of the Kinabatangan River. And, when we concluded this 1 million trees planted last year, we said, okay, we cannot stop here. We need a new ambition. And we have launched this project Relief, which really stands for Reforest, Restore, Respect. Again, this idea of regenerating the environment. And we will be planting around 3 million trees, 2 million in East Malaysia, but also 1 million in West Malaysia between 2021 and 2023. And I think that's also an important way how we can engage with the community. So this provides livelihoods to many, many people from quite, underserved communities. So we help them. It creates a space for the local species like the orangutan, like hornbills, and the pygmy elephants to have, areas, corridors that they can safely transit without invading the palm oil areas, which then creates this human-animal conflict that normally ends in the wrong way for the animal. And again, I have a very last video, I think in the limits of time, to show you what Project Relief is trying to achieve. So, Joji, okay. Okay. Yeah, I think that the sound, sorry. Yeah, I think that the sound was not great, but I think you got the idea. And last but not least, and again, this depends a little bit on the regulatory landscape in the country that is evolving, and I think that will support much more this transition in the coming years, but clearly we are committed to transition all of our factories, we are starting to work on having a green fleet of cars, etc., into renewable energy. But again, when we talk brands, it all starts and ends with the consumer. And I would just like to conclude before going into some questions with the next slide, please, Georgine. In this idea of the role of the brands to inspire consumers to take action and to start adopting these more sustainable lifestyles. I will share with you, actually, I have a few of them with me. One activity that we are promoting amongst all our employees, but also, that maybe I will promote with you, is to start doing your eco bricks. So an eco brick is something as simple as an empty bottle of water, of coffee, whatever you want. And all these tiny little bits of plastic, when you eat a Kit Kat or when you eat whatever, what you do with that tiny piece of plastic? Well, I'll tell you, many of you might throw it away or might throw it into a general waste bin, and we know that it will end up in landfill and probably will end up also leaking to the ocean. So imagine such a simple behavior. Start putting and compressing inside a bottle all those tiny little bits of plastic so that they don't end up in litter. I tell you, with this, you can do many things. You know what we do with this? For instance, some basic furniture. This can also be used as a material construction because it's highly dense. So in integration with bricks, cement, and other materials, that can be a great way because imagine it's easy to recover a bottle of plastic from the environment. It's extremely difficult to recover all those tiny little bits of flexible parts that we use all the time. So really, these are little behaviors. I can tell you in an internal campaign, we have done like 1,500 of these. And I can tell you, here in one bottle, you can have about 1 month of your little flexible packs that you use at home. So again, encouragement to do this. Small behaviors can change the world. And that's what I believe. Brands and companies like ours could reach so many millions of people all the time. We can play a role in promoting this responsible behavior and drive change because, have no doubt, we all have to change. So now concluding, I will just close with this picture from our first beach underwater cleanup that we did last year during the recovery MCO. We collected on the beach and also underwater around 6 tons of plastic with around 500 volunteers who participated, obviously keeping social distance and making sure that everybody was safe. But again, it's been a pleasure. Thanks for your time. And I think that we have a few minutes for any questions.
Thank you, Juan, for your lively presentation. Yes, we do have a few questions from the audience. First, what is your opinion on the possible introduction of extended producer responsibilities in Malaysia? And what is Nestle's preparedness on this journey?
Well, I can share that we have recently, together with other 10 large players in the industry. I mean, I will not mention anyone, but all the big names are there. I mean, the Coke, Pepsi, they will get mad at me, Colgate, Mondelez, I'm forgetting F&M, Dutch Lady, Spritzer, Tetra Pak, and probably I'm still missing one of them, Unilever. So we have established MAREA, the Malaysia Recycling Alliance, which is basically the first voluntary EPR constituted by, basically the big players in the FMCG space. And our ambition is that to start working on the solutions to the problem. Because we know in Malaysia, there is a powerful recycling industry. There is infrastructure for collection, but unfortunately, the separation is not as good as it could be. And then the upcycling is not as good as it could be, because at the end of the day, what we know is that in spite of having this infrastructure in place, a massive amount of the waste ends up anyway in litter, and in the landfills. No? So within Maria, which again, it's a first voluntary EPR here in Malaysia, we are trying to think about, we can compete in the market, but we can also work together to solve this problem that is common to all of us and to the society.
Thank you. That brings us nicely to the next question, because you were talking about recycling, but in this current day and age, packaging should be reduced and be made more from recycled materials as much as possible. How is Nestle supporting the zero waste movement and reducing packaging or introducing compostable packaging?
Yeah, but we must not forget, and again, we all they hate plastic, but plastic plays a role. Remember, we are in a very warm climate with high humidity. When you go to a fancy store in Bagsar, probably you have a nice air conditioning. But I tell you, when you go to other places in rural areas, the products need to be protected. And plastic is an effective barrier against moist, against, poor hygiene conditions that you may find in some places. So clearly, the problem is finding alternatives that still protect food. Let's think also about the importance of keeping the duration of the food for several months. So many of the solutions that you have, unfortunately today, do not work in our current climate, but it doesn't mean that we must not explore them. I tell you that we are actively working with to adopt recycled PET in our bottles. There are a number of hurdles that need to be solved from the regulatory standpoint. There is not enough supply. One of the challenges that we have today is that the supply of recycled PET or recycled PP as alternative to virgin plastic is still not, developed enough. I can tell you that we have some projects involving even Petronas to see how we can accelerate this transition, adopting chemical recycling, pyrolysis, and others. So for sure we must do. We are doing, for instance, one very important area for us is reducing how much plastic we use. Eliminate redundancies on packaging, and also, if you can sell your product with a packaging that is like this, don't do it like that. So basically, try to bring efficiency and reduce the amount of virgin plastic that you require. But I must say, this is work in progress.
Thank you, Juan, for sharing your real-world experience in incorporating sustainability into Nestle's branding, marketing, and communications. That's all the time we have for questions, so thank you very much.
Thank you. Real pleasure. Bye.
Bye. Before I introduce our next speaker out for our wrap-up session, please could I get your support in answering a couple of feedback questions which are displayed on screen on WebEx. Your feedback will help us improve the content we bring to you in the coming months, so please fill this up. Our 3 feedback questions to you are: was the event effective in increasing your understanding of sustainability as a business strategy? Which sessions did you find most useful? And finally, which topic would you like to learn more about? This poll will continue to be on screen and online for the next few minutes, so grateful if you could take the time to respond. While you complete the poll, I'd like to introduce Usman Ahmad, CEO and Managing Director of Citibank Malaysia, for our final session of the day, where he will pull together everything that we've learned this afternoon in this wrap-up session. Prior to his position as CEO for Citibank Malaysia, Usman was the CEO of Citigroup for Bahrain, Kuwait, and Qatar, and concurrently the global head of Citi's Islamic banking business since October 2015. Usman, grateful if you could join us, and the mic is yours.
Thank you very much, Arina, and thank you for that introduction. I must say that it's a pretty daunting task to try and sum up the excellent content that we've seen today and the presentations and the videos that we've seen in 10 minutes, but I shall try my best. And I must say that I think Juan's last presentation, where he had a call to action on 3 million trees in 3 years, was particularly fantastic. Listening to everyone, it reminded me of the Native American proverb, where that basically goes like, we do not inherit the earth from our ancestors, we borrow it from our children. And that to me really sums up the essence of what we've heard today from the viewpoint of, protecting our future and making it an essential priority for all of us to embed sustainability into our work, into our culture, as well as the entire business operations and supply chains that we have. It is indeed our corporate responsibility and our moral conscience that we do all we can today to build environments that are life-sustaining and economically viable. Fredrik from CDP made a very pertinent point of the need for robust collaboration and engagement with the supply chain when it comes to environmental data disclosure. And in this, the impact of benchmarking, tracking of cost efficiencies, enhancing customer relationships, and also the aspect of better risk management, transparency, and operational competence are some of the salient parameters that we should all consider very early on in our sustainability efforts. I particularly like the quote where he shared the setting of a sustainability target in just step one, and that cascading sustainability commitments is indeed fundamental to all of us. Also, as a city-trained banker for over 21 years, I cannot agree more with his reference to global best practices, especially the one on board and management oversight and climate change. Getting leadership endorsement from the top is a critical success factor in this instance. When we set strategy, there is always the need to have a good measure to assess value generated, raise standards of quality and execution if needed, and justify the good investments that have been made, particularly in light of shareholder responsibility and governance. Shifting from procurement, I must also thank Karlijn of ABN Amro for her presentation on sustainability and human resources, drawing our focus to people engagement within the organization, matters related to diversity, and also aligning to the customer journey and experience. Her emphasis on the organization and that a sense of purpose is always value-led and salient to organizational transformation is indeed very well taken. Courage is the other strong point that was mentioned. And in any process, any change process in particular, taking our people with us to embrace that which is new always calls for a fine balance of purpose, collaboration, and courage. Thank you, Karlijn, for connecting the dots, as you rightly pointed out. Our final presentation from Tann was indeed very enlightening. Nestlé, as the world's largest food and beverage company, resonates very well with all of us, particularly here in Malaysia, where I'm told that every Malaysian home has at least one Nestlé product, with Milo, which was introduced in 1950, being the favorite there for the last 70 years. Hearing from Tann today on the company's focus on embracing sustainability holistically in the business chain, in the packaging and the repackaging and the recycling efforts, and in integrating it into the Nestlé brand experience, affirms the need for a comprehensive and a 360-degree stakeholder engagement when it comes to sustainability and the climate change agenda. The focus on renewable energy as well, in incorporating recycling as a priority focus and engagement with customers, communities, suppliers, and retailers to ensure a consistent commitment to have sustainability at the heart of our brand values and experience is truly commendable. And I would like to highlight that such an approach to sustainability indeed addresses the need for job creation and employment right through the entire supply chain, from the farms to the suppliers and retailers, and not to mention the corporate organization itself. Additionally, community integration in sustaining the environment and supporting pro-environmental initiatives of the kind that we saw in Sabah from Nestlé are initiatives that really can be generating much broader engagement and a multiplier effect and creating much more employment within the communities as well. Citi and Nestlé share a common step in our sustainability agenda, and that is our commitment to net zero emissions by 2050. Citi recently announced also a $1 trillion commitment to sustainable finance by 2030, aligning to the UN Sustainable Development Goals. As I close this session and ask for a call to action, I would just urge what the Governor, Her Excellency, mentioned in the morning session, that it is up to each one of us and up to our organizations on how we take the charge and start to make the change. Sustainability and climate change is an area that is life-affirming, not just for today. It is a journey we commit to in the present for the generations to come. It is both a legacy and a trust we leave for the future, and we all have a collective responsibility when it comes to sustainability and climate change. My sincere appreciation to all our speakers, to Bank Nagara and to the Securities Commission for a highly engaging day and for a highly engaging session this afternoon. Thank you very much. Thank you, Elena.
Thank you. Thank you so much, Usman, for that useful summary and practical insights. Please join us tomorrow for discussions on sustainable finance and management of climate change. We will be discussing Bank Nagara's green taxonomy, giving tips to operationalize the TCFD, provide insights on climate risk disclosure, and more. We will also be hearing from the Ministry of Environment and Water on the national agenda on sustainability and from the Minister of Finance on sustainability in private finance. I hope to see you all tomorrow. The JC3 Finance for Change Flagship Conference is co-hosted by Bank Negara Malaysia and Securities Commission. This event is supported by the UK government's Low Carbon Energy Prosperity Programme in partnership with Ernst & Young. This conference would not be possible without the technical support and hard work from CIMB, SME Bank, and Zurich, and without help from our knowledge partners, Climate Governance Malaysia, WWF, FIDE Forum, Swiss Re, Fair Finance Asia, AFI, and IPFIM. Wishing you all a good evening ahead. Thank you so much.
Thank you.